Week. It's the much anticipated week ahead of Bajaj Housing Finance and the Fed rate cut. There's so much to look forward to this week. And of course, we're going in with a very strong setup where the bulls are in control of the street.
Yeah, man. I mean, I still think the Fed remains numero uno, but Donald Trump, China data, fund flows, there's just so much happening in the world to look forward to. It promises a rollicking start Monday morning itself.
Yeah, it's an important Monday morning, and in order of I think things or factors that are going to impact the market, definitely Fed ahead this week. Over here, the Bajaj Housing Finance IPO listing and the whole host of listings, the primary market becomes very, very important from an Indian perspective as well. Remember, people's money which was stuck and those who did not get allocations, that has now been released. So all of that available now to invest in markets. But let's start with the global setup very quickly before we move ahead and, what trade has been like. Let's pull that up for you. So it was a strong close for U.S. markets on Friday. That was definitely a positive, capping off a pretty good week. It also is a great setup for a week where all the focus is going to be on the Fed meet. Starts on the 17th. It's a two-day meeting. By the time we get to react to it, it will be Thursday morning. But all eyes on that FOMC meet. It's a 60-40 split now on the expectation of a 25 basis points with, I would say, 60% nearly expecting a 25 basis cut depending on all of the data that we have seen thus far. Let's look at how bond yields have behaved, and a bit of a slide before that, the 10-year at 3.65%. Gold was interesting, jumped to a record high ahead of the Fed meet. Spot prices above $2,600. The expectation is it could hit 3,000. So gold, one to keep an eye on. Crude, if you look at the crude has been fairly stable, so nothing much on the crude front ahead of the meet, about less than 0.35% really up on NYMEX. But Asia is the interesting story. So a whole host of Asian markets not open today. Japan, Korea, China itself not open. But you will see some impact on the Hang Seng, about 0.5% down. And what they're responding to is actually data coming in from China. And we'll pull that up for you because a whole slew of economic data from China is now increasing the worry of what is happening in one of the world's largest economies, really, and a manufacturing hub. So retail sales, for example, in August, up 2.1%, lower than expectations, 2.5%. That was a big hit. Industrial production, up 4.5% versus expectations of 4.8%. The rate at which assets are being formed, fixed asset investments, also lower than expectations. More importantly, the fact that industrial production is growing faster than retail sales is telling you about the supply-demand mismatch issue that China is facing, and that's going to be one big factor. In fact, let's set it up with a conversation with Matt Orton. He's Head of Advisory Solutions and Market Strategy, joining us on the show this morning. Matt, great to have you as always on India Market Open. And on an important week, all eyes on Fed, 25 basis points largely expected. What really is going to be the reaction if it's all pretty much priced in?
It's a great question. I think there's still a little bit of uncertainty with respect to what the Fed's actually going to do. So the market pricing is looking for, I think, majority leaning towards a 25 basis point cut, but it's much closer than it has been over the past couple of weeks. And on top of that, I think what the market's really going to react to is going to be the guidance that we get from the economic projections, and what the Fed signals is going to kind of be the depth and the pace of the rate cutting cycle that we get, because the market is pricing 10 25 basis point rate cuts between September and the end of 2025. I think that's a little bit extreme. I don't think that we're heading for a recession, as we've talked about in the past. I think the economy is slowing. It's not breaking or cracking. And so I think the market might have to pull back some of its rate cut expectations, which I actually think would be a great opportunity for investors to use any sort of volatility or downside a little bit more opportunistically, because there's still a lot of good value in this market, and building balance, I think, should be a key theme for investors going forward.
Matt, given a choice between EM equities, US treasuries, and US equities, post a with an assumption or a hypothesis that the Fed will cut 25 basis points and sound off future price cuts or rate cuts until December, what would you choose?
I think you have to have U.S. exposure. The United States earnings growth are still very, very strong. And I think there's a lot of pockets of the U.S. market that still look very, very attractive, especially tangential artificial intelligence plays like utilities, electrical equipment companies, data center buildouts. But our emerging markets look attractive. Investors are very underexposed to emerging markets across their portfolios. It's been a significant underweight for a while. And on top of that, there's a lot of markets in the EM complex that will benefit from a US dollar that continues to weaken. So I think if you can strip China out of the emerging market equation, which I've been advising to clients is to get EM exposure ex-China, I think there's going to be a longer-term uphill market for a lot of these emerging markets. Look at Indonesia, look at the Philippines. India is the prime example. India has been my largest overweight in the emerging markets complex for the past 2 years, and it remains my biggest overweight going forward just because of the growth and a lot of attractive corporate profiles across the spectrum of the market. So I think you've got to have both.
Hi, it's also Samina joining in. Just a quick perspective check. So global equity markets have done okay in the last 2 months. The MSCI World Index is flat. MSCI Emerging Market Index is down 4.3% in the run-up to the Fed. Commodity prices have been in a doldrum. HRC steel trades closer to $700, which is almost a record low. Even metals like copper, which is in high demand due to the focus on renewable energies, is down 8% in the last 3 months. Crude is sub $70 a barrel. So while I know there's euphoria, there's excitement, talk about risk on trade, the fact that commodities are reeling under pressure is a clear indication that global growth is slowing down. Isn't that a real worry for you when you buy into risk assets?
You know, Samina, that's a really good point that you bring up. And when I talk with a lot of clients, they do bring up the fact that you're having weak commodities, particularly relative to gold, that continues to strengthen. And I think you almost have to bifurcate the conversation. And this really leans into the idea of why selectivity is so important going forward. Simply owning the index, owning the emerging market index, still gives you about 30% weighting to China. And as you started at the beginning of the show, China has been the weak part of the emerging market complex, but you're seeing breakouts across a number of other markets, and you've got the Nifty at record highs. So there's a lot of differences between markets, and I think that's what's so exciting for me as an asset allocator, as an investor, is that you can pick and choose your places in the market. Just like in the US, you might not want to be overweight the Magnificent Seven over the past month, but there's been a big run in utilities. There's been a big recovery in some of the data center plays. Real estate, which is a little bit more rate sensitive, has continued to increase. So the main message that I can give to investors is, rather than just owning the entire index, pick and choose the specific sectors, pick and choose the specific markets that you want to get exposure to and where you're seeing that growth. And I think that is what's going to be critical for success over the coming months and really over the longer term.
All right. Thank you, Matt. Pleasure as always to speak with you. And of course, it's going to be a week focused a lot on global flows and global action. But I don't know if you guys read this over the weekend, this sort of conspiracy theory or talk about hark back to dates of what happened in 2007, where on September 18, the Fed cut rates after 4.5 years, and that triggered off the whole global financial crisis of 2008. So a lot of people over the weekend online saying that, are we going to see something similar in 2025? But, you know, because of the similarity, September 18th, again, in 2007, you had a rate cut after a long time. The conversation then was it too little, too late by the Fed? And then that, of course, turned into the housing crisis. But, you know, talking about our markets, Friday was good. So just quickly, the implied open and the fund flows before Samina comes in with a recap for the day, but implied open at 67 points up. So not half bad after the kind of run-up we've seen. We were talking about Friday fund flows, which were fairly robust. You had buying on both sides, foreign and domestic investors, close to about 2,500 crores of buys coming in. And you had even the bank Nifty showing signs of life all of last week.
It was interesting, right? Friday was a day of markets taking a break, but that was par for the course, especially after the fantastic run you had on Thursday. For the week, the markets have had a good run. They've recouped all their losses from the previous week, going home with gains of nearly 2%. New record highs were made. Participation came in from across the board, even though the major gains were led by large cap names, with Thursday especially marking all your Nifty 50 stocks going home with significant gains. What happened was on Friday was the large cap guys took a little bit of a back step, giving way for the broader market stocks to actually do quite well. Well, the Nifty remains perched very comfortably at levels of 25,300. So that is an important level on the index, which was well respected in trade on Friday as well. FMCG, IT, banks helped the Nifty scale new heights. The banking index, which has been circumspect for quite some time now, made a pretty strong comeback last week, managed to gain 2% higher after having a quiet start to last week's trade. The mid-cap and the small-cap index also made new highs. Foreign investors who've probably been on the sidelines, maybe allocated funds or rather had funds blocked towards the Bajaj Housing Finance IPO, came back into the market to pick up stock on Friday. DIs also continued to add to their portfolio. While we're talking about what happens globally, I think what was important to note is that in India, of course, the mutual fund industry data indicates that it's been a record inflow. So 2024 has seen inflows of 38,000 crores going into Indian equity markets. This is the second largest ever inflow for Indian equity markets. So August was a phenomenal month if you just look at the participation that came in or money that went into mutual funds. So fair to assume that local investors are getting savvy, bulking up on their positions or of course their allocations ahead of that much anticipated Fed rate cut. And it's also the 42nd consecutive month of inflows that Indian mutual fund industry has seen. The other good news is if you're not a day trader, you would be pleased to know that 88% of the top 25 mutual funds in the month of August have actually outperformed. Now it comes in as a relief, as a pleasant surprise, because what we began to see is that passive funds were performing as well as the benchmark, and it was an active fund managers one being able to create the alpha that investors are seeking. But a slight trend reversal has been obvious in the month of August. So while there's always a risk that there could be a financial crisis around the corner, there's geopolitical, commodity prices are at record lows in that sense. But Indian investors are sitting flush with liquidity, and that mutual fund inflow number, I think, would be enough to give us comfort that we may just be insulated or decoupled for now.
Yeah, low beta for sure as a result of all of that. But yeah, I mean, the trade setup effectively is around flows and around Fed, right? I mean, 7,695 crores on Thursday, 2,365 crores on Friday. The picture is looking good from the FI front as well. So the broader markets regained strength in Friday's session, a bout of outperformance by the broader markets in Friday's trade, which was very good. The bank Nifty setup somehow just looks positive, and I don't know if it's the color of the money which leads banks to do well. Typically, FIs, the first port of call is the heaviest sector. It is also it's also a well-valued sector, so the bank Nifty setup looks really okay. And it's just very difficult to call in sharp cuts into the markets ahead of the Fed policy decision. I really, really doubt too many people will have the gumption to take up a large short position, even if they believe the markets are overvalued ahead of the Fed move. So I think the setup until then, very likely, maybe volatile, but very likely to be consolidating with a positive bias. And it's a no-brainer. I mean, while FMCG might correct today, and we'll talk about all of this, FMCG, sugar, rice, etc. I think the Bajaj NBFCs and the other housing finance companies will remain in focus today, viewers, because if indeed Bajaj Housing Finance, is to list at maybe a 90 to 100% premium, then the implied valuation still holds about a 7-8% uptick to a Bajaj Finance alone after the 2.5% up move that we saw in that stock in Friday's session. And some of the other housing finance stocks which are active might continue to be active. So Home First, Aptas, LIC Housing Finance, all of these are a good move in Friday's session. Very likely that may continue.
Yeah, it's going to be an interesting Monday morning. And luckily for us, global cues are rather muted. So you don't have too much that's coming in from Asia to hang on to. So it's going to be largely about a story. And I know we are all very excited about seeing what Bajaj Housing Finance lists at. But there are two other smaller listings too. They should be mentioned. There's Cross and the Stallins Tires. Both are indicating a premium. But unfortunately for Cross, what's happened is it was supposed to open at a 20-25% premium. And this, of course, is the grey market premium. It's not dependable data, but it usually is the only data one looks at in order to indicate or get to a stage of identifying what sort of a listing a stock could anticipate. That has now become half. So while all three are expected to open positive, Bajaj, of course, is expected to see a gap up of nearly 100%. Stallins and Cross should get a listing anywhere upward in the range of 10 to 15% at the time of listing. So you have those three. You have a couple of counters that are opening up for subscription, Arcade being one of them, and Northern Arc. So we'll talk about that in a little later on in the show, but those are two subscriptions that are open or opening up for the markets. In fact, Tamanna and Niraj, I think the joke should be that I think we might need a separate channel or a separate show just to track primary market action.
Yeah.
The focus just seems to be that. And if we include SME IPOs, then there's no stopping. We could create all-day programming on primary, secondary action in the markets. But coming back to stocks that you want to track today, it's going to be the Adani twins in some sense. Well, of course, there are more than two Adani listed companies, but these two, of course, are counters on top of my list. You want to track Adani Power and Adani Green. The good news coming in here is that the Maharashtra State Discom issues a letter of intent for the supply of 6,000 megawatts hybrid solar and thermal power by the companies. Adani Green will supply 5 gigawatts solar power from Quada, and Adani Power will supply 1496 megawatts of thermal power from new 1600 megawatt ultra supercritical capacity. Both these counters should get a thumbs up. I've also been told by research that MK has put out a report on this. We'll delve into that in a little bit more detail, but a strong upgrade coming in on these counters on back of this order win.
Just one small addition there. So the effective thing is that with this capacity addition, 26 gigawatts of their total capacity is now has a secured PPA at about 2.7 kilowatt per hour rate, which is phenomenally impressive.
They probably, so that is what it is. So some part of the capacity already being confirmed in that sense, being picked up. So with clarity of cash flow, with clarity of execution, timelines, this turns out to be a huge positive for both those Adani Power and Adani Green stocks. MK also, I don't know, Niraj, have you looked at the report? I think 42% upside on power and green?
Yeah, so Adani Green, the target price remains the same, but their earnings estimates move up a little bit.
So it's increase in earning estimates. The stock price target remains the same, like Niraj indicated. Well, the other one that I'm watching out for this morning, and I guess we watch out for this one every week, is Dixon Technologies. It's a slew of order wins pretty much every other day. They, of course, came out Friday evening, announced that the ARM Paged Electronics has signed an MOU with ASUS India for manufacturing of information technology products, which is notebooks. Again, the size of this order, the timelines is something we will try and understand from Mr. Lal when we talk to him during the course of the show. Well, sugar stocks, watch out for these. It seems like the last few months have been good for this sector. They get whiplashed around on back of regulatory or policy changes. But this morning, sugar stocks will be in focus for all the right reasons. The government has allowed sugar mills and distilleries to make rectified spirit and extra neutral alcohol from sugarcane juice and heavy molasses. Now, remember, these sugar companies have been sitting on excess capacity. So if they can sell it without any problems on that, these counters will stand to gain. The other space that will gain and gains as an ancillary is going to be alcohol companies. So keep an eye out on alcohol companies on back of this regulatory change for sugar stocks. And sugar, of course, will see an improvement in cash flow, hopefully some profitability as they're now allowed to sell this excess capacity that they're sitting on.
And we'll be speaking with Sri Renuka in just a few minutes from now. So stick around for that. Just on Dixon, Atul Lal had mentioned already that a fourth player is coming in. So while the new deal with Paget and ASUS is exciting, I'm not sure you'll see too much of a run-up. We'll wait and see, considering that the stock has already sort of run up a fair bit and it was known that a fourth player would come in, and now they have like a bulk of that whole space
I'm
in
almost
India.
comparing, I mean, of course, both are very different companies, but very similar in what they've been doing. One is Lemon Tree, which announces a hotel opening every other day, and now you have Dixon realistically, announcing these big order
But
deals.
if you recall, he told us that 4 majors are coming and the 4th one will happen soon. And then you had that note last week on Keynes Tech and Dixon, so both of them had fairly run up. So maybe more steam left in there. All right, just a few more stocks on my radar. Lumax Autotech is the first one. This is interesting. They're foraying into green and alternate fuel segments. They've acquired almost a 60% stake, a majority stake in a company called Green Fuel Energy Solutions. It's a supplier of high-pressure fuel delivery systems for CNG and hydrogen vehicles, has key clients and OEMs like Maruti Suzuki, Tata Motors, VECV, among others. And it's going to be an important one. I mean, complete direct impact positively for Lumax Auto because now they get into this space. So that's one to watch out for. Zydus Life Sciences, actually 2 pieces of news, one positive, one negative. But I'll start with the negative because I think sentimentally may outweigh the positive. This one is an FDA warning to Zydus's Gujarat plant for CGMP violations, that is current good manufacturing practices. They've issued a warning letter on the 29th of August because what they found was cross-contamination, particulate contamination, poor aseptic procedures. Now, not as bad as what turned up in Granules inspection last week, but remember the kind of hit that Granules had, we might see a bit of a downside there. Could it be sort of balanced out by some good news that Zydus has received over the weekend, because they've signed an exclusive licensing and supply pact for 2 injectables which are used in MRI procedures to enhance visibility of internal organs. They will be marketing, distributing and selling these products, and overall both have about a market share of $240 million in the United States. So that's definitely up. The third one, and Niraj mentioned it briefly, but I'll go into it in a bit of detail, is Bajaj Finance. In fact, the Bajaj twins, Bajaj Finance, Bajaj Finserv, and housing finance companies, because of the blockbuster listing. It also would lead to a re-rating of other housing finance players. So Aadhar, Aptis, PNB Housing, LIC Housing, keep all of those in focus. You could definitely see a bit of a bump up here. I mean, we're speaking with an analyst ahead on the show, and if you do a peer-to-peer comparison in valuations, how do the others stack up now is the question. So these are some that we need to look at this morning.
Okay. In addition to that, 3 other names. And some music in the studio. But watch out for Laurus Labs. They've concluded the successful US FDA audit for the API manufacturing facility in Hyderabad. Normally, this should probably not be very big news, but because of what's happened to Granules last week on US FDA, this could be interesting. So watch out for Laurus Labs in the session today. I'll be interested in watching out for Patanjali Foods because GQG Partners Emerging Market Equities Fund has bought 1.24% stake at 1854, in or around the same price. Since the name involved is GQG, could be very, very interesting to watch out for. And the third one on my list is Uno Minda. Goldman Sachs has a note. They see a 28% upside to the 12-month target price of 1350 because of various reasons, which we'll come to a bit later on in the show. Because I think sugar, guys, becomes really, really important. What's happened, viewers, is that the government has allowed companies to make rectified spirit and ENA from sugarcane juice and bee-heavy molasses. Mr. Atul Chaturvedi, Executive Chairman of Sri Renuka Sugar, is with us on the show to talk about the impact of the same. Mr. Chaturvedi, good having you. Good morning, Niraj here. What kind of a difference does such a passage of a rule mean for sugar companies which are heavy into ethanol manufacture like yourself?
Very good morning, Niraj. In fact, if you look at what happened in December of 23 last year, the government banned the diversion of cane juice and bee-heavy ethanol into alcohol or ENA or rectified spirit. But now, and at that point of time, they were worried that the sugar crop, the cane crop may not be all that great and the sugar production might suffer. But that didn't happen. And now what the government has done about a month or 15, 20 odd days back, they have withdrawn the ban which they had implemented in December of 2023. But in that notification, they probably forgot to mention that rectified spirit and ENA, or portable alcohol as we call in common parlance, that also would be allowed. So it's a kind of a rectification of whatever had been done in December. And this is definitely positive for the industry, because otherwise you were only making portable alcohol or rectified spirit only out of sea molasses, which definitely was affecting the productivity. So I think it's positive for the industry. Yep.
Mr. Chaturvedi, hi, Tamanna here. Just want
Good morning.
Good morning to you. Just want to understand, when you say it will increase productivity, can you quantify that? By how much? Do you need to expand in capacity now for this, or does current capacity work for it as well?
Now, my take is that the current capacity works for it, for sure, because now in the country you have a distilling capacity of probably more than 16 billion liters. So that is sufficient to take care of both potable alcohol as well as rectified spirit and the government's target of 20%. And more so, the government has also permitted about 2.3 million tons of rice to be diverted to ethanol. So I don't think there's any need for expanding the capacity, but what will actually happen is the capacity utilization of the sugar industry, which had suffered big time, would definitely improve with this.
Hi, Mr. Chaturvedi. It's also Samina joining in. And in terms of charting your territory over the next couple of months, what percentage of your overall revenue do you expect from producing rectified spirit and ENA? Will this new permission create a significant diversification in revenue segments and also impact profitability over the next 2 to 3 quarters?
No, my take is rectified spirit and this ENA will not be a major contributor to the volumes. But definitely with the permission and with the opening up of the cane juice and B-heavy ethanol for ethanol, I think overall the capacity utilization of our distillery, which has suffered big time, would definitely improve big time. So, and this year it seems that the government is also seriously working towards ensuring that the overall volumes from the sugar sector, which had plummeted to roughly about 46% of their total ethanol, would again go back to its level of about 65 to 70% of the ethanol to be supplied. In fact, the funny thing is that the grain sector lately has been supplying something like about 56% of all the ethanol which is going to the government. And the sugar sector is only supplying 44%. And that was largely because of the ban. So with the lifting of this ban, so overall impact on the sugar sector would be very, very positive.
Just one quick question. Would it help companies which are also ventured into potable alcohol brands, as also maybe some of the liquor companies, because the supply of raw material comes in?
So my take is that the supply of raw material to the liquor companies would definitely improve. So it would be definitely positive for the liquor companies.
Companies which have ventured into potable alcohol as well, this should be positive.
Yeah,
I mean, you may not have, but I think Triveni and some of the others have these brands now. So it could be constructive for them as well as an add-on.
UP, they are diverting a lot of this for this country liquor.
Right.
But I would say it would be much more positive for the whiskey brands or Indian-made foreign liquor brands.
Okay.
Yeah, that should be positive. Yep.
So you mentioned this just briefly, but just wanted more clarity on this, Mr. Chaturvedi. Do you see any impact on sugar production now that this diversion has been allowed? Do you see a reduction in sugar production at all?
No, my take is that this year the rain gods have been really Indian. Inamdar was really Indian, and the monsoon spread across the country has been fantastic. And good rains bring good cheer to the cane crops. So our take is that the cane crop this year is going to be very good. Even last year it wasn't all that bad, but this year is going to be very good because the spread of rains both in UP, Maharashtra and Karnataka has been excellent. So we don't see any hiccups as far as the cane crop is concerned, and the growing period is more or less over and done with.
Yeah. All right. Thank you so much, Mr. Chaturvedi, for speaking with us. That's the voice coming in from Sri Renuka Sugars, and actually on the industry, because he usually has a take more on what's happening in the industry rather than anything else. You know, here's the only downside about stocks of a commodity like sugar is that there is so much government control. So that headwind, that regulatory headwind is always there. You do not know when that tide will turn and when it will be reversed. The situation from last December to this September might be different, but festive season around the corner, if demand goes up. So that's just one thing that I think viewers and investors have to keep in mind.
Most certainly. But just the fact that ethanol is now allowed the way it is, it's such a delight to see the P multiples of these stocks move up. But Tamanna, speaking of P multiples, I don't think the new kids on the block need any support on that, because the listings promise to be stupendous. I mean, Bajaj, since the news of the IPO announcement, Bajaj Housing Finance shares have been highly sought after in the other markets as well. But independent of that, the point is, Samina, it's set for a stellar listing.
It's the largest sort of subscription we've seen of our times. Whatever it's worth, Bajaj Housing Finance has overtaken Coal India, which got a subscription worth 2.3 lakh crores. This one beat it hands down with over a 3 lakh crore subscription on Bajaj Housing Finance. If you were to just quantify this, it tops 1% of India's GDP. So that's the kind of money that went into this IPO. And of course, lots of hopes. This morning, lots of hearts that will be, beating quite fast, but it's going to be a big one as we gear up for Bajaj Housing Finance to list at 10 a.m. Quick details of it. It's a 6,560 crore IPO. The price band of this was in the range of 66 to 70 rupees. Overall subscription was upward of 64 times. QIBs, NIs and retail participation was robust. What you want to remember is that while it was highly oversubscribed, it was also the other group companies that were quite euphoric in terms of buying activity seen over the last couple of days of trade. Anchor investors raised 1,700 plus crores, came in from very big hands, not just locally but internationally as well. You had names like Abu Dhabi Investment Authority, Government of Singapore, Nomura, JP Morgan, Indian institutions that actually bet the house in that sense on Bajaj Housing Finance. Well, this is expected to get a very warm welcome as we gear up for trade today, irrespective of the broader market sentiment, which fortunately for them is still on the positive side. The last time we checked, the expectation is that you should be getting a double down on Bajaj Housing Finance this morning. 120% premium is what the street believes the counter could be listing at. If we do get a listing which is at a gap up of about 70 to 80%, Bajaj Housing Finance will hit a 1 lakh crore market cap within minutes of its listing today. Well, lots of reasons why people love this company. One, it is one of the largest AUMs in the industry at 97,000 crores. Their growth has been stupendous, with AUMs growing 31%. Profits are also up 56%. They do have the ability of leveraging from their parent company. And of course, they have a very stable and healthy AUM book, net non-performing assets, gross non-performing assets, all at industry best. So all eyes on this one. It's going to be a big listing that the market will be tracking at 10 a.m. And there's been so much of conversation, so much of talk about this one. It is expensive, but who's to tell expensive and cheap in today's day and time? Well, that's what we have for Bajaj Housing Finance. Double down is what we are expecting at 10 a.m. The other two that we should be tracking only because they will be listing, yes, they're not as big as Bajaj Bajaj Housing Finance, but they still deserve a mention. You've got Tollins Tires. This was an interesting company. In fact, lots of participation did come in from anchor investors as well. It's a small IPO, 230 odd crores. The price band is between 215 to 226. Overall subscription stood at nearly 17%. Participation was seen from all quarters and verticals of investors. They are expected to debut at a premium of about 13%. A likely listing price is about 256 rupees. Well, this is a leading player in the tire and treads industry with a presence in India and internationally as well. They look at countries like East Africa, Jordan, Kenya, Egypt, and the growth is also expected to be quite healthy going ahead. EBITDA PAT grew at a CAGR of 42%. So all in all, a good company. Money is going to be used in order for capacity expansion, and part of it is an OFS. All in all, a good listing is what's expected. Of course, nowhere close to Bajaj Housing Finance, but a 10 to 15% gap up is what we should get on Tollins. Apart from that, you've also got Cross. Cross had an issue size of 500 crores, was well subscribed by anchor investors. Their price band is in the range of 228 to 240. Overall subscription stood at about 16, 17 times. They are expected to debut with a premium of 10%, so at about 264. 268 is what the likely listing price is expected to be. This one is a prominent manufacturer of a diverse range of forged and machine components in India, with an expanding local and global presence all over the world. Again, good earnings, strong growth on profitability, strong growth on revenue. It seems like the markets were excited about this too, because the oversubscription number is there for everyone to see. But a 10 to 15% gap up, guys, is what we should get for Tollins and Cross, but I guess these two can't be comparing themselves to Bajaj Housing, which is expected to list at over 100% premium today.
The question really today is, what do you do if you did get an allocation, and what do you do if you didn't? In both cases, should you try and add on? Should you wait for the dust to settle? And, you know, this is the thing, Niraj. I mean, you speak to all of the experts we speak to every day, and most of them will come and say that I don't believe in IPOs. I wait for everything to settle, and after a week, I look at it. But when you have an issue like this, the frenzy is slightly different.
Yeah. But and also, I mean, hopefully people don't believe too much in SME IPOs, because there, post the listing day, they're under the water. But main board IPOs, Tamanna, Chinmay just told me, Chinmay is a part of our research team, he just told me a statistic day before, that 45% of the companies, even now, are trading, or 55% of the companies on the main board IPO, even now are trading above their listing day prices.
Yeah, but then in that, I would want to see a cut of the big ones, because some of the big ones turned out to be duds. I'm not taking names, but some massive IPOs weren't as exciting as we would have hoped for. So that's one big thing this morning. The other one, of course, is what the setup is for the F&O segment, and Samina is there stationed at the video wall to give us that input as well.
Yeah, we should have a long distance relationship. I'll just stay put here. But yeah, it's an interesting Monday morning, right? We're going into trade after a pretty solid last week, where Thursday saw the bulls make a comeback, and how took the Nifty to new record highs. That was led by the front weight heavyweights. Then came Friday, when the frontline index took a little bit of a break, but the broader markets chipped in. Sectorially, all sectors were looking good for most part of the week. The Nifty gained over 2%. Now, as we gear up for trade this morning, this is the sort of picture we are picking up. There is a little bit of constraint in terms of the amount of upside that the markets could see from these levels. The Nifty futures continue to trade at a premium, but there's been a slight decline in OI, which really means that fresh longs are not coming in thick and fast as we'd have liked. But again, remember, it's going to be volatile. You're going into the Fed rate cut. So even technically, traders may want to be a little more cautious at this stage. And of course, this comes on the heels of a 2% rally that the markets did witness last week. Bank Nifty played its role and played it well, gained 2% last week. This morning, very similar picture in terms of what we're expecting, very similar to what we saw on Friday as well. Bank Nifty's trading futures are trading at a discount, largely indicating that there could be some sort of downside pressure on Bank Nifty over the next day or two. OI is also showing a flat move, so nothing really expected on Bank Nifty in trade. It's going to be a morning of consolidation, where the buys may for Bank Nifty remain on profit taking. Remember, we are in kissing distance of 52,000, which is a very important level, or has been on Nifty Bank. On the Nifty itself, crucial levels, but now, of course, new levels are opening up in terms of the spread. As you may see, 25,900, 26,000 have actually become quite active as we see it. In terms of the open interest distribution, 25,400 has the maximum call OI. This really means that the action is focused here, and that's what the markets would like to, of course, keep a very close eye out on. It's a level that the bulls and bears both watch quite closely. This becomes an important level on the upside. To what I understand, 26,000 also has been quite active over the last day or two. 25,400 followed by 25,500 is the resistance that the market participants will track. On the downside, there's very heavy increase in open interest addition on the put side at levels of 25,000. Now, this has been an important level of support for the markets over the last few days. Remember, the range has moved from 24,800 to 25,000. Up until, I think, Thursday, it was 24,800 and 24,900 that had seen maximum put OI. But for now, 25,000 is the support, followed by 25,200. And on the upside, the range remains at 25,500 and 25,400. That's what we have in terms of the put and call activity. It is going to be a day, a week of consolidation, so that tight range is what the street will closely track. In terms of Bank Nifty, it's 52,000 that the participation or participants will closely track, and you can look at this. Look at where the resistance is sitting. This is the call action that we've seen on Bank Nifty at levels of 52,000, and on the put side it's 51,500. So all the way down to 51,500, the trading range remains at 52,000 on the upside and 51,500. Well, but what should you do if you're looking to trade these markets? Is it Nifty, Bank Nifty, or is it stocks? Amar Dio Singh now joins in with his recommendations. Amar, before I go into your stock picks, very, very flat in terms of the options data that we are picking up on the Nifty and Bank Nifty. Do you feel like today could be a day where it could be consolidation, or would you initiate a strategy either on Nifty or Bank Nifty today?
Yeah, very good morning, and thank you for having me on the show. See, last week we had I would say, a significant up move in Nifty and Bank Nifty as well. And I would say this week markets would be slightly cautious ahead of the US Fed meet. So there could be some consolidation, but overall trend continues to remain strong and positive for Nifty because the broader structure of the market continues to remain strong. Yes, some of the heavyweights, they need to really pull up the stocks like Reliance or HDFC Bank, in particular these two. But overall, if you look at the structure across different multi-caps or across sectors, the advanced decline ratio, that bodes well for the markets. So the trend remains positive. Nifty needs to sustain above the 25,350, 400 zone. That's an immediate zone of resistance for Nifty. Taking that out, Nifty could witness a significant and sharp rally in the coming days. On the downside, Nifty's got very strongly supported on the 21,100 and 150 zone. So it's more of a buy on declines. I wouldn't say the trend has changed. The trend continues to remain strong and positive. Yes, on the daily charts, we did witness some sort of consolidation, but again, there has been a positive pullback. Even the derivatives data, I would say, more or less is not, I would say, overly negative. So I would say be on the buy side. For Bank Nifty needs to sustain over the 52,200 level. Currently, it's slightly below the 52,000 level. So sustaining over 52,200 level, we could again witness a sharp rally in Bank Nifty because the intermediate term trend, long term trend remains very strong. Short term, yes, we did witness some sort of consolidation in Bank Nifty as well. But buy on declines is what is the strategy one should have. Yes, slightly cautious ahead of the FOMC meet because we would witness volatility, increased volatility, but again, that's part of the markets.
So Dev Singh, in terms of stocks, what is it that you like? I believe you've got two strategies. You want to take our viewers through your recommendations?
Yeah, sure. So the first one is Bharat Forge. So if you look at Bharat Forge, we've seen the stock witness a significant rally and then going for consolidation almost from 1,800 levels. Currently, it's around 1,620. And it's trying to form some base, which is very evident on the daily charts. And also, if you look at the derivatives data, so we've seen some long build-up happening over the last couple of days. So this is one stock one can look at. One can look at the futures, September futures, buying at any decline towards 1,610, 1,615, with a stop loss of 1,563 and a target of 1,715 on the upside. And the second stock to look at is a bull strategy that is for IEX, Indian Energy Exchange. This is still far away from its all-time highs, which was almost 320. Currently, it's around 220 odd levels. Very strong on the charts. The derivatives data is also showing some long build-up happening here. So here one can look at a bull call spread. So buying a 220 September call option at 4.5 and selling a 225 call option at 2.5. The difference being 2. In this case, the stop loss can be 0.5 and the target is 6. Maximum loss in this is 5,625, whereas maximum profit is 15,000. So this is the second stock one can keep a close watch on.
Well, thank you. Thank you, Mr. Dev Singh, for joining us today. Those are a few ideas, both on the long side for traders who are watching us this morning. With that, it's back to you and Niraj and Tamanna, both of you.
All right. Now let's shift focus to the rice sector, which could see an uptick on the back of government scrapping the minimum export price of basmati. Mahima joining in to tell us how rice stocks could be impacted. Mahima, positive news.
Absolutely, Tamanna. It's absolutely a positive move, move for rice exporters. The government has removed minimum export price of the $950 per ton for basmati exports, and this will overall help stabilize the prices of basmati rice, which has been falling continuously due to fewer global orders. Now, prices of basmati rice at wholesale level are expected to increase from 55 rupees per kg to 65 rupees per kg. And just for viewers' context, in October, the government had reduced MEP of basmati exports to $950 per ton from the $1,200 per ton mark. Now, this could benefit stocks like LT Foods, KRBL, Chamanlal Setia Exports and GRM Overseas Limited. In terms of LT Foods has reported a sales growth of 17% in the rice segment, and the company is very optimistic about achieving a double-digit growth in international markets in FY25. KRBL is a very key player in terms of basmati exports, and it has underscored the importance of markets such as Iran, Iraq and Saudi Arabia, and which is where it is now exploring, and has maintained a 6% steady market in US and has witnessed overall a 30% decline in FY24 in terms of basmati rice exports. So, and this was of course on the back of this MEP which was there. So KRBL could be one of the possible beneficiaries. The third one is Chamanlal Setia Exports, where exports contribute around 89% to their total revenues, and export sales had declined overall in FY24 by 1%. However, Asia Pacific, Middle East, Africa contributed overall 84% of their overall revenues in financial year FY24. Now, GRM Overseas could also benefit from this because in terms of FY23, exports share to their total revenue was roughly 76%. However, FY24 data is still not available in their annual reports, but of course, overall it's a net exporter, and which is why it could possibly benefit GRM Overseas as well. So these are some of the key stocks that could benefit on the back of this news.
Well, we'll watch out for some of these in the session today. I think it'll be also interesting to see what happens to the Godrej Agrovets of the world on the upside because of the edible oils import duty and the hike thereof, or some of the FMCG companies, and if they correct. So I think that's the other bucket within this whole eatable staples names that you got to watch out for. But it's time for the watch list, profit watch list, and the list of the first stocks on our radar: Adani Power and Adani Green LOI for supplying 5 gigawatts of solar power from Khavda for Adani Green and 1600 megawatts for Adani Power. So these stocks come in focus. Sugar stocks: the government allows use of sugarcane juice in rectified spirit and extra neutral alcohol. So watch out for those. Stuffcraft has a brokerage note. MK sees a 56% upside to the stock. Edible oil stocks: import duty on edible oil hike by 20%. The likes of Godrej Agrovet could benefit. And Nazara Technologies, there's a board meet on fundraise on the 18th of September to be watched out for.
Yeah, I mean, Nazara Tech has been buzzing for a whole host of reasons, but some more to look at. Lumax Auto has acquired Green Fuel Energy, so it's a foray into a new segment, will be seen as positive. Rice stocks, we just spoke about it. Minimum export price has been scrapped. This is something that, for basmati specifically, so this is something that exporters have been looking at. FMCG companies, on the other hand, will have a double hit, double whammy. One, because of the rice exports being, the minimum export price being scrapped on one hand, and on the other hand, because of the edible oil moves as well. So a double whammy for them. We've written Bajaj Housing Finance, but that's not listed yet. We mean Bajaj Finance. All the group companies, even Maharashtra Scooters actually, and housing finance stocks will benefit. Maybe Bajaj Housing Finance makes it to our watch list after tomorrow, but not yet today.
Well, a few more counters you want to watch could be on the sell side, but we've, of course, highlighted most of them for you already. It's going to be an interesting Monday morning. A quick check on implied Nifty before we go over to our guests. It's time to take their recommendations and their views of the market. It's looking good. An 80-point gap up coming in very healthy. Thursday saw a strong run. Friday saw profit booking and consolidation. And this morning is expected to see another good start. Soni Patnaik and Kush Bora both join in with their technical view on the markets. And Vineet Pulinchkar of Ventura Securities joins in with the fundamental view. Soni, hi. I'll start with you. It looks far better this morning than it did a few days ago. The Nifty is comfortably perched above 25,300. Bank Nifty is in kissing distance of 52,000. Would you recommend long trades? It's an important week. I'm pretty certain it's going to be volatile. But fresh longs or Nifty, Bank Nifty recommended as we see it?
Good morning, everyone. Thank you for having me on your show. So I think Nifty has given a very strong close above its earlier resistance of 25,300. So the last 2 days of Nifty's close, we've been seeing it above 25,300. On closing basis, it stands quite imperative that it continues to hold on this momentum if it has to see further upside. The bullish momentum continues. It's quite intact. In fact, Nifty can test 25,500 to 25,800 odd levels. I think that's the range on a positional basis one can watch out for. On immediate basis, intraday 25,200 will act as a very strong support where the put writers are slowly positioning themselves and shifting their base from 24,800 to 25,000 and now slowly shifting it towards 25,200. I think that's the base and the support stop loss to watch out for. Continue to hold on for your longs in Nifty for a target of 25,500 followed by 25,800. If we talk about Bank Nifty is just shy away from breaking above 52,000. However, it has also given a very strong close on a weekly basis. So I think Bank Nifty also one can continue to buy at current levels. Any move above 52,000, 52,100 will see a strong short covering in Bank Nifty, which can lead it towards 52,500 to 52,700. So continue to hold your longs in Bank Nifty for those targets. One can place stop loss at 51,600 in spot levels for Bank Nifty.
Right. Kush, let's start with your index calls as well, because it's going to be an interesting week. And at least the open looks like it's fairly positive. Would you take a long position?
Hi, morning, Tamanna. Well, the cautiously optimistic view is back on the Nifty, primarily because we've been talking about this. This is the third peak that the Nifty is making. Let's say from somewhere mid July onwards, early August onwards, where the RSI is seeing a negative divergence. So I'm not entirely convinced of this move. But then, the price action has been very different. We've taken support at the 20-day moving average and, we've rebounded from there quite sharply on, Thursday at least. So I think this could continue, but I wouldn't be, overly aggressive, at this juncture. The Fed action aside, even technically, it's not suggesting that, you need to be overly aggressive at the moment. While the bias does remain long, largely because of the support at the 20-day moving average and the price action, I would be a little cautious on the Nifty. The view on the Bank Nifty, however, is very different. The index has now broken beyond that 51,800 band. I know 5,200 psychologically, makes a strong level, and option-wise also there is a strong call congestion on this. But I think the technically the more important level for me is 52,200. Once that is taken out, you're looking at the 52,800 kind of a level. So if you want to go long, then consider Bank Nifty as your index. Nifty, if you already have a position, not a bad idea to hold with a stop loss of or a trailing stop loss of 21,500. I wouldn't be aggressively long on Nifty. Bank Nifty is where I would create fresh long positions if I have to.
Okay, let's so Kush, cautious on the Nifty, saying go long on the Bank Nifty. What about your picks this morning, Kush?
A couple of them on the long side, mix of futures and cash. Both Pidilite Industries continues to impress on the upside. It's had a long consolidation of about good 2 months. If you see on the weekly setup, it's given a breakout above the 30 to 50 resistance mark. FMCG stocks in flavor anyway. So I think Pidilite is something that you can consider on the long side, maybe even positionally. 33.90, 34.75 are the targets to look at. 32.20 is where you place your stop loss. Can't keep chemical names out of the picture, right? So, Ami Organics, this stock has had a good run. We've seen a positive crossover, a golden crossover a couple of sessions back. Friday was a good move on the back of very strong volume, practically 2.5 times the monthly volumes. So here too, if you want to consider a positional bet, then 15.75, 16.50 are the targets to look at. 14.40 is where you place the stop loss.
Right, Ami Organics on Kush's radar. Sony, morning. What about you? What are your top picks this morning?
So Tamanna, the first pick would be from the IT space, Persistent, which is seeing a fresh breakout. It's approaching those ranges. It has given a very strong close above 5,300 on charts. So one can buy Persistent somewhere in the range of 53.50, 53.40. That range one can buy. Keep a stop loss of 5,270 and a target of 54.50. Above that, a second target of 5,500 can also be seen. The second pick is from the financial space, M&M Finance, which has seen a fresh breakout, and this time the breakout has seen a strong close above 330 mark as well. So in M&M Finance, one can buy in the range of 333 to 330. That range one can buy, keep a small stop loss of 325, a target of 340, followed by 345. And just to add a disclaimer, we've also recommended Persistent 5,400 call option and M&M Finance 340 call option to a JM client. So both are our official recommendations.
On the fundamentals, Vineet, good morning. Thanks for joining in. What's been your stance? Have you told people to buy, or are you telling people to book profits?
No, we are asking people to book profits, get more defensive, because we think this rally is very stretched on the upside. The risk is now building up against investors. And I think being into pharmaceutical sector and maybe a little bit of banking would be the order of the day.
Okay, Vineet, so that thought, at least from two of our guests, words of caution. We'll take a break on that note. We need to slip into a commercial break, come back, try and probe some of these answers a bit more. Stay tuned, viewers. We'll be right back.
back. Less than 2 minutes to go for the pre-open session, and it's looking like we will have a positive start this morning. Let's just pull up the implied open very quickly. Yeah, we're climbing up, so about 80 odd points up at open. Vineet Bolinchkar joining us now. Vineet, do you see a spillover effect continuing on Bajaj Finance, Bajaj Finserv, and housing finance companies because of all the focus on the IPO listing of Bajaj Housing Finance?
So, the timing of the Bajaj Finance, Bajaj Housing IPO could not have been better. You have a rate cut on the anvil and internationally, and you have the listing happening out there. So, rate cuts are predominantly bullish for markets. And I think the entire Bajaj clan will move very well because, insurance is in a good tailwinds. Bajaj Finance with the, ex-Bajaj Housing is a concentrated play on consumption. And we have seen government dishing out 3 lakh crores of annual freebies. This will continue for a long period of time. And along with that, you have the rural incomes also going well. So I think that consumption is a very big story and Bajaj Finance is a leader out here. So I think all 3 stocks will do well.
Finance viewers, I think that's what Vineet Bolinchkar is saying, that Bajaj Finance. Remember, I think some math suggested if Bajaj Housing Finance were to open at a 100% premium, and there is, after the Friday move of 2.5%, there is probably still another 6-7% left for Bajaj Finance. So keep that in mind. It's the big one, the all set to make its debut after receiving record subscription for its IPO. Shobhana first joins us live from NSE.
Subhana.
Yeah. Acha, Subhana joins us live from the NSE, but it's a big day, so you excuse me this small slip of tongue, Subhana, but big expectations from the listing. Oops, sometimes things like this happen. Let me just ask Kush Bora. Kush, while I won't ask you about the new kid on the block, but the stocks that have rallied thus far, the likes of Bajaj Finance, some of the housing finance companies, what do you think of them? Is there more juice left?
Well, a lot of them have already seen some traction. So if you see, PNB Housing Finance, it's had a stellar run and the up move continues on the back of good volume. So I think, that's one stock that you can have on your radar. Canfin Homes is starting to look quite interesting, although very close to the resistance mark, but it does open up. If it does open above the 930 mark and stays above that for some time, this is the one that can play catch up. I think between the 2 Bajaj stocks, which is Bajaj Finance and Bajaj Finserv, I think Bajaj Finserv still looks like, it's got some steam left. Bajaj Finance has had, rallies in the past. And then after, the news or the momentum has fizzled out, continues to, find its way down. So I'll be a little cautious on Bajaj Finance. If I have a position, then I will go ahead, at least book partially at the current juncture. So Bajaj Finance, I'm a little cautious. Among the other housing finance, Canfin Home, PNB Housing Finance, these look good.
Kush is in a cautious mood today. Cautious on most things. Not necessarily a bad thing. Subhana, is the mood cautious at all at NSE? I'm assuming not. Subhana and Maitri, both our colleagues there, covering what is going to be the blockbuster IPO of this week and maybe even longer than then. Yes, Subhana?
No, the mood is not at all cautious. In fact, shares of Bajaj Housing Finance is likely to see a bumper listing at a premium of over 100% at the upper end band of 70 rupees of its issue size. Now, the IPO, which was worth 6,560 crore rupees, saw a subscription of 3 lakh crores. But it has said to have broken Coal India's IPO record of over 2.4 lakh crores back in 2008. Now, Bajaj Housing Finance's IPO, which closed last week, it had seen investors had subscribed nearly 64 times, on its final day. This was largely led by institutional investors and followed by retail investors. The issue was also subscribed over 7.5 times on its second day and over 2 times on its first day. And now this strong IPO is underscores Bajaj Bajaj Housing Finance a strong parentage and it's a wide distribution network and best asset quality among peers. Following the IPO, the housing finance company is now ceased to be the wholly owned subsidiary of Bajaj Finance. This has also come as Bajaj Finance, which is the arm of Bajaj Finserv, had allotted nearly 51 crore shares to the successful bidders. So it's likely to see a bumper listing today.
Very, very significant morning, probably one of the largest oversubscription of our times. Bajaj Housing Finance in just a few minutes from now, and in fact just an hour from now, we'll see how this one goes. But 100% gap up is not ruled out as we see it. Sony, I want to talk to you about a couple of those gainers from Friday. Everything in the tech pack did really well until the end of trade. You had Wipro that was gaining on very large volumes. Now, the reason I bring this up is because it's been such an underperformer over the last couple of months. Not sure what ticked in. Maybe it was a catch-up rally, but the volumes were phenomenal. So, quick word on Wipro. I did notice you had a buy call on Persistent. Birla Soft as well has had a good sort of run on Friday. Any specific calls on these two stocks that I just mentioned?
Samina, I think Wipro has a strong momentum. We can see it has given a good close, above a good breakout above 530, 535 odd levels, and it continued to hold on to that momentum. So I think Wipro one can continue to hold for a slight higher targets of 570, 575 for the day. And anybody already who would have got it from the Friday levels can trail these stop loss to 540 from current levels. Fresh entry also can be done at 550, 545, that level. Keep a very small stop loss of 540. Hold for higher targets of 570, 575. If we talk about Birla Soft, it has given a very strong close above its 20 EMA hurdles. I think Birla Soft has a stronger chance and a good risk-reward ratio favorable, where the stock can head towards 690 to 700. So it's a good enough 40 points from current levels. One can buy, keep a stop loss of 645. So I think risk-reward ratio is more favorable in Birla Soft than Wipro. Hold on for targets of 700.
Another quick question in terms of sugar stocks and alcohol stocks. They usually react to regulatory changes, and this one is expected to impact the sector positively. Any sugar stocks or alcohol stocks that you would trade on? I remember many years ago, these were trader favorites, and then, of course, they just fell off the radar in so many ways. Sony, that was for you. Any trades on sugar or alcohol names this morning?
So sugar, I would still avoid, Samina. It's not showing the kind of breakout or the conviction level on charts as of now. So maybe it's a wait and watch in the industry. If we talk about the alcohol stocks, I think United Breweries is one stock which has given a good close. It's continuing to hold above the 2060 mark. There is a minor hurdle around 2100. Moment it crosses 2100, you see a very sharp short covering towards 2140. So I think the stock is just hovering around those resistance level. One can hold on UBL with a stop loss of 2060, a target of 2140. Even United Spirits is a stock which has closed and continuing to hold above its all-time high levels. It's still continuing above 1500 mark, very strong. So one can continue to hold in for United Spirits as well with a stop loss of 1510, 1510, a target of 1560 can be seen.
That's the call coming in some of those sugar and alcohol companies. Sony isn't too optimistic on them just yet. But as always, it's time to hit the brokerage link. Now it's Stuff Craft that may be in focus today. The cooking appliance maker has now gotten a buy rating from MK. Mika is standing by with more on that. Mika, what do you have for us today?
Good morning, Samina. Yeah, the target price for Stovecraft is set at 1,350, which is actually a 56% upside from the previous close of the counter. Now, MK has highlighted that the company is growing significantly ahead of its peers, and its massive cost leadership has been led by its deeply entrenched manufacturing, and it has sharply enhanced its manufacturing edge. Now, the brokerage has also noted that the strong new product innovation capabilities add the strategic value for money positioning. They've also noted improved branding, distribution expansion, which also includes a new age channel. They've also highlighted that Stovecraft has been rapidly improving its export position as the largest exporter, and it also supplies to Walmart. They've also remarked a demand cycle recovering after nearly 2 years, which are tough for the company. Lastly, they expect 15% and 33% revenue and EPS CAGR over the FY24 to FY27 period, and they've also noted that the valuation is attractive at 13 times the September 2026 forward EV to EBITDA ratio, which is a 46% discount to its peer TTK Prestige.
Okay, thanks a lot for that, Mihika. So we'll certainly watch out for Stovecraft, 3.5% higher in trade today. You know, the other two stocks that are high in trade are Adani Green and Adani Power. Should pull them up as the pre-open rates have settled down. Just pull those up higher. Adani Green, 3.5% higher. Adani Power, too, was in the green the last time I checked. 4.5% higher, in fact. Better than Adani Green, too. We need Bulinjkar. I know you look at this power space closely, too. The largest solar order ever. Is this a shot in the arm for these stocks, or are they expensive enough for you not to buy them? How would you look at them?
No, they're not expensive at all. I think they've just been having a time correction. And if all goes well, then we should see follow-through action. We can expect a 40-50% upside from the current levels for both these stocks.
Adani Green go up 50%, Vineet. What's the fundamental thesis?
So, the rollout of they have a 60 gigawatt vision, and that is being rolling out, and they've raised all their funds that they need. Last time we saw the worst of Hindenburg's false claim come through. So, I'm seeing that increasingly people will brush off any kind of negativity or any kind of alarms coming from the Western world. And that bodes very well for the stock sentimentally.
Well, that's the call coming in Adani Green and Adani Power. Big upside as per Vineet Bulinjkar. Both those counters are up and about in pre-open trade. Along with them, you've got stocks like Radhiko Khaitan, Sri Renuka Sugars, all seeing some buying in early minutes. That's what we should be expecting as we gear up for trade this morning. Kush, what are you doing in metal stocks? Run up to the Fed rate cut. Metals have had a good play on Thursday and Friday. Anything in the metal index that you would go long on between now and Thursday?
Again, here too we've seen these bouts, but some of these names are close to resistance mark. So we like Tata Steel, that's had a good move, but here again, there is a resistance, around the 156, 60 kind of zones. Even Hindalco did not really, have a great closing on Friday. So I think here too, I think this momentum could fizzle out. Plus the negative news that has come out from China perhaps might, wane a little bit. The one stock that we've liked and, we've recommended in the past is Ratnamani, metal and tube. This one's had a good run. It hit the first target, I think, for a second target of 4,000. If someone's got an existing position, you should continue to hold on, but not on a lot of these, top line names.
Okay, another set of stocks that are responding this morning are definitely FMCG stocks on the lower side. That's because the government has hiked basic customs duty on refined palm, soya bean, sunflower. In fact, has been hiked from 12.5% to 32.5%. So steep hike effective September 14th. Now, because of this, palm oil imports, which are 1.2% of total Indian imports, will get hit. For exporters, it's good news, of course. So, like a Godrej Agrovat, and we'll see what some of them are doing pre-market as well. Adani, Wilmar, Patanjali, they could be positive, and you're seeing that. But on the other hand, FMCG companies, for whom palm oil can make up 20% of the weight, will really be hit. So, HUL is one of them, biggest and largest end user of palm oil derivative. You will see impact this morning on a Britannia, on a Colgate, on some of those counters are definitely seeing a bit of a pain. Even a Godrej Consumer, actually. Britannia 2% down, Godrej Consumer also getting hit. Colgate doesn't use that much of palm oil, but yeah, Godrej Consumer definitely getting hit. All the biscuit and noodle makers will be hit the most. Vineet, on the positive side, do you see any decent upside there, because the hike in duty is quite significant. So this is a big advantage for domestic producers.
Yeah, so I think definitely Adani, Fortune, and your the other company should benefit. Patanjali, they should benefit immensely from this.
There are a few names, Vineet says, that you should watch out for, Patanjali being one of them. Well, healthcare, pharma. Vineet, what are you doing with pharma stocks? All of last few weeks, the buy has been very aggressive on pharma companies. If not pharma, then you see action in hospitals. If not hospitals, it's diagnostics. It seems like the sector and its ancillary has been aggressively bought into and getting bought into as we speak. Your top picks from the pharma pack if one had to enter the sector today?
So in pharma, we like Biocom. It looks very good. Then we like Eris Life Sciences. These are two of the stocks that I would definitely recommend taking positions. Biocon for its aggressive portfolio. I think good things are going to play out over the next couple of years in biologics. And if we talk of Eris Life Sciences, great play on the Indian domestic pharma. They've just consolidated number of brand purchases. And I think the volume should come through this time with working up of margins.
All right, quick last call from you, Sony. I mean, I'm seeing some of the auto anchors also not doing too badly this morning. Amar Raja, Endurance, even Tata Tech showing a bit of a spike. Anything on your radar?
Definitely, Tamanna. It would be from the pharma space. Zydus Life, which is approaching a 20 EMA hurdle just on opening. Any move above 1135 in cash level can see the stock heading higher towards 1160. So one can buy in Zydus Life above 1135 for a target of 1160, keeping a stop loss of 1120 for intraday.
I'll watch out for Lotus Labs, and Patanjali has two different forces at play, because when GQG buys, stocks typically react, but this edible oils import duty hike might be a negative. So therefore, opposing forces at play for Patanjali. So bear that in mind. Kush, maybe I've missed it and maybe you've already said it, but 20 seconds. If you had to bet on one stock intraday trade today, what would that be?
Senco Gold, the next targets are 1300 and 1330 from a trading perspective, and a stop loss on this one comes in at 1240.
Okay, in some sense, not surprised that Kush has gone for a gold company or a company involved in gems and jewelry, simply because that bucket was so active the whole of last week that a spillover of momentum entirely possible. But here come the first trades this Monday morning in the all-important Fed week. About a very, very flat start, must say. So the implied open kind of flattered to deceive, if you will. Banks lying flat. IT should come up on your screen next. And let's just see if Nifty IT is moving at all. No, not really. So the Nasdaq move not having too much of an impact. Mid caps, small caps, they're about of outperformance in Friday's session, and that seems to be continuing with a 0.5% uptick to the mid cap space, and the small cap pocket about 0.5% too. So not bad for the broader markets. Let's get the heat map up on the screen. See if there are any notable moves. So, okay, FMCG taking a stick. Britannia, HUL, Nestle, no surprise hereof. Maybe some of these stocks change completely during the course of the day. The initial sentiment negative would definitely be there, and no surprises here. But very little red. That's the key thing. More green. Surprise, surprise, metals are doing very well. So likely that the rate cut argument, and China probably doing it for $5 trillion worth of mortgages as well, helping them, because otherwise the Chinese data that was released wasn't the strongest. One would have thought metals will react, but they're not. ONGC marginally higher as well, about 1%. Kotak and HDFC Bank have different moves. Adani Enterprises about 0.5% higher as well. So that's the long and short on the index, at least, that metals are doing well, or commodities by and large seem to be doing well, and FMCG taking it on the chin this morning.
And not surprisingly, because, as we talked about it, a key substance that they use, palm oil, the import duty on it has gone up massively, almost doubled. So no doubt about it. But the overall picture is interesting, because there you get a sense that metals are definitely shining, and that's good news for that entire pack. FMCG on the lower side of it, but even energy, PSU banks not doing too badly this morning. The whole pack. The Bank Nifty tepid, but at least still in the green. Let's look at the broader indices and just see how they are responding this morning. The Nifty and the mid cap and the small cap in the green. no runaway kind of excitement. Remember, quite a bit of money has come back into the markets, into investors' accounts after Friday, when all of the money that went into Bajaj Housing Finance and people who didn't get allocation, that got released. Will some of it be deployed today is what we have to see. Specific stocks, and let's see how they're buzzing on news. Adani Power, Adani Green first on our list. Standard disclosures, of course, but this was a big order, 6,600 megawatt of power agreement with Maharashtra, which will be Adani Green, Adani Power and Adani Green, please, not Adani Ports, because this will be supplied from Khavda and 5 gigawatt plant from Khavda. So both of these in focus, doing fairly well this morning. And we should look at that. KRBL is the other one that we're looking at this morning. Basmati rice exports have been lifted. That's been great for the stock. Look at it, over 6% up. Sugar stocks in focus. We spoke with Sri Renuka Sugar. He said that this is extremely positive for the industry. 2.5 to 3% up for some of those key stocks. Dixon again in focus, packed with ASUS. The fourth in a row. It's positive, but has it already been priced in? That's why maybe not such a runaway response as we had expected. For Zydus Life Sciences, there were two sets of news, one negative, one positive. They seem to be balancing each other because the license for injectables, for 2 injectables is good, but then US FDA action, not so good. So you have a complete sort of a neutral stance on that stock. Lumax Auto is pouring into alternate fuel. They bought a company as well. Definitely one of the newsmakers this morning, 7.5% up, buzzing in trade. We spoke about some of the FMCG pack, but let's broaden that out. Britannia, Godrej Consumer, also down in trade. And, these are the main sort of moves that you're seeing. So no runaway moves, save for a couple of them out there. But rice, a lot of commodity focus this morning, Samina. Rice, sugar, and edible oil.
Industrial metals as well, it turns out. So anything commodity is out to have a party today. Tamanna's already mentioned that KRBL is your top gainer, the NSE 500. If you can just take a quick check of how that space is doing in this outperformance. 0.3% higher, but what I must mention is Bank Nifty. We are now trading above 52,000. This is going to be, or rather is a good sign for the bulls. 52,064 is what we have. Almost touched 52,100 just about a minute ago. Anything jewelry is looking good. Anything gold is shining. Senco, TBZ, Titan, Kalyan, of course, is a little soft this morning, but it's only a matter of time that these stocks catch up with the kind of rally that one would expect on them. In terms of stock movers, we've mentioned to you that KRBL was looking good, but what we didn't mention is BSE. Look at how it's come out of nowhere and turned out to be one of the top volume gainers on the Nifty. 5.5% added to BSE as we see it. The stock is looking very, very healthy. And Bombay Burma is also having a great morning in terms of trade. Apart from that, the top 3 other gainers on the Nifty 500 is the Adani Group. Adani Green, Adani Wilmar, and Adani Power, all trading with gains in the range of 2 to 4%. Not sure what's happening in Edelweiss. Can we pull that stock up? 8% higher is when I last saw.
Buying into it, likely leading to this.
That's it. That explains it. Edelweiss looking very, very good as we see it. 9% gain on the stock. Motilal Oswal also trading 2% higher. BSE up 5.5%. Anything that's got to do with financial or financialization of savings. Actually, even the mutual fund data that came in on Friday could be a reason why some of these AMCs and, of course, advisory companies are doing well. Metals are having a good day. Stocks like Godrej Consumers are doing well. Tech is also on the buy side. On the sell side, you've got Imami, Just Dial, Varun, HUL, EPL, your usual suspect, fertilizer counter, some of your banking names are soft. But all in all, a very pleasant start of trade this morning. The focus is Adani Group stocks as a group. That's the group that's leading in trade. Along with that, rice, sugar, alcohol are also doing fairly well. We have one quick question before we, don't know whether we can take one quick question from Sony. Sony, very quickly, markets opened up 5 minutes ago, one trade you've spotted for our viewers.
Definitely. I think we can look at Tata Power, which is doing good in the morning trade. So Tata Power in futures, it is about to cross the 450 hurdle. The stock can head any move above 450. It can head higher towards 465 to 470 for intraday basis. One can buy it in futures and cash in the same levels, keeping a stop loss of 440 and a target of 465, 470.
Well, we'll have to call it a day. Vineet, Kush and Soni, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Let's get in Andrew Holland, CEO of Avendus Capital Alternate Strategies, on the show as well. Andrew, good having you. Thanks for joining in. It's the big week, morning. Andrew. You have the choice of going long, short, both. How are you positioning yourself in the Indian markets in the Fed week?
On the long side, obviously, doing shorts in the market at the moment, despite all the kind of negative factors that can be out there, is very tough, Niraj. I mean, you just have this tidal wave of domestic flows which are coming into the market. So you might have 1 or 2 days where the market, that the index kind of falls, but it's very, very few and far between in terms of being able to kind of think about shorting the market. It's very rotational. You get caught out too quickly. So the momentum's there. The tidal wave of money is just sweeping away any fundamentals, anything that you'd like to kind of think that could be negative. It doesn't. It lasts for a day or so, and that's about it.
Andrew, you sound mildly disappointed about how the tidal wave of money is sweeping away anything fundamental. And that tidal wave, a lot of it going into the primary markets as well. Are you excited about all the buzz in the primary markets?
Yeah, I mean, you're getting some good companies come to the market, so that's the good news. Every day there's either a block trade, a QIP coming as well. So you are getting some, reasonable kind of, companies, where you can take a more shorter term view in terms of trading as well. But when I say I'm disappointed about the valuations, it's just that some of it just doesn't make sense, and therefore it's difficult to kind of want to kind of take longer term investments because you're just wary that valuations have run ahead of themselves. But the momentum's there, so you can't fight it. So you just have to keep with it.
Okay. Andrew, so if you're positioning on the long side, is this a tactical call, or would you reckon that there is a bit of a structural move with the Fed move, not just a move that is going to happen this week, but likely 2 or 3 other moves until December?
So this is a big event before, obviously, the US elections, Niraj. So that's the next big call that we'll talk about, I'm sure, in the next few months. But for the Fed, it's really about whether it's 25 or 50, and the narrative around what he's saying in terms of ongoing rate reductions. I'm hoping that it goes for 50 to front end the kind of interest rate cycle, and I think that's what the market would like as well. I think we've gone past that kind of is the recession looming in terms of in the next six months. But I think if he does 25, it will again raise that kind of fear that is behind the curve, and I think that's what the market is going to be focused in on. My view is that if it's 50, market's going to push higher till the US elections. If it's 25, I think it's already baked in, and I think there's probably more headwinds for the economy. So it's all about, do you get that soft landing or not? 25 says we're going to be in doubt. 50 says it's probably a little bit more likely.
Andrew, what does this mean for Indian markets? One space that FIs like has always been banks. They've been showing a little bit of strength, a little bit of a comeback in the last few weeks on the technicals. Do you feel like might be a good time to spur up buying across banking names on anticipation of foreign flows coming back in and just sheer underperformance?
Yeah, the underperformance has been hugely stark. I think we've all been kind of over the past year saying this is the time to look at banks, and particularly with the interest rate cycle starting to head down. And even if the RBI does nothing in October, I suspect they'll do something in December. And if you look at the 10-year bond yields, are at 6.7 now. So it's indicating all the factors are there for the RBI to be more dovish and reduce rates going forward. That should be good for banks. My fear at the moment for the banks is not necessarily just about the NIMs, but we're not seeing the government spending and private capex spending picking up as quickly as I would like to have seen, because that obviously they'll have a multiplier effect on the economy, and therefore earnings can be upgraded again. I'm not seeing that. So I think we're seeing a slowdown in the economy. We're seeing forecasts in the market come down from over 7% to as low as 6.5%. So that's a worrying factor when your valuations in the market are baking in a Goldilocks scenario across all sectors within India. So I think that's something to watch. But with this domestic money, I don't think it's really kind of playing out at the moment in terms of any fears of earnings downgrades or the fact that the market, if you take from April the 1st, is up about 12%. There's very little, to my mind, there's very little expectation the market can move significantly higher from here.
Andrew, you talked about 25 basis points or 50 basis points and how markets will react in either case. What camp are you on? Are you penciling in 25 basis points or 50?
I think 25 is baked in. I don't think there's any doubt about that. It's whether it's going to be 50. I think they should do 50. I think the market would feel calm about a 50. And front-ending the interest rate cycle. I think the market, if you go back a few years, is still worried about them being behind the curve when they talked about inflation being transitory, and it wasn't. So, I think that's what the market would want, and I think that's what they should do. Ahead of the elections as well, is probably a good move.
Mentioned the elections, Andrew, as the next big trigger. But why really from an emerging market standpoint? Because the commentary always is that no matter who wins, the India angle or the India relation is fine. Once that headwind is out of the way, then global money can flow in as well. So why do you think the elections will matter, and what are the two scenarios looking like?
So I think if it's a Harris win, then probably it's more kind of positive to markets. If it's former President Trump's winning, then we'll only talk about tariffs and how high they're going to be, and I think that's going to be a geopolitical, a global factor, which could hurt particularly kind of China, but it could hurt other countries like South Korea, Japan, etc. So that would slow the U.S. economy actually more than the kind of higher interest rates at the moment, and that would be a factor that plays across emerging markets. Now you can say yes, India stands out because it's a defensive market in terms of we're not a big exporter, but it would hurt growth. I mean, there's no two ways about it. So those are the kind of factors which I think the market's just ignoring at the moment. It's fine because the big event is the Fed. But thereafter, it really is about the policy of the new president and what it's going to be. With Harris, I think we all know what that could be, and it's less likely to have an impact, although it could have an impact on, kind of higher taxes in the US, which again would have an impact on the economy. So whichever way I look at it, I think just ignoring the elections for any outcome for India, whilst we'll be more defensive. And I've said before, to you, Tamanna, is that, if the market falls 5% globally, we'll probably be half of that, given the domestic flows at the moment.
Andrew, you've been constructive on the liquor businesses, at least some of them, if not all. There's a shot in the arm today by virtue of the government decision, but that notwithstanding, do you reckon that this is a multi-year theme? Can people invest into some of those businesses?
No, it's premiumization, Niraj, is something which we've talked about a number of occasions. It's something that's not going away. With a younger generation, they want to try new things and are willing to pay up for that. I think that's where, for most of the alcoholic and non-alcoholic beverage companies, they're going to benefit. So whilst your top line is going to grow maybe 10, 12%, your margins because of the premiumization is going to be a lot higher than previously, and therefore your growth is going to continue to kind of grow at that kind of 15 to 20%, if not more, over the next 3 to 5 years. So it's a great story. It's a story that's not going to go away.
It's a story that's not going to go away, and it's one of Andrew's favorite stories. But thank you, Andrew. You have a good week, and we will see you soon.
Thank you.
Well, one stock from last week that had been in the news was HP Electric. It bags another significant order to the tune of 144 crores for the supply of smart meters. They've also got orders with 2,100 crores for supply of smart meters in July. Total order book now at 3,700 as of July 2024. We have the management with us to help us understand the significance of this order, the timelines of this order, and of course, if they are bidding for any more orders such as this. Gautam Seth, joint MD of HPL Electric, joins in. Good morning, Gautam. Thank you very much for joining us this morning. Gautam.
Yeah, good morning.
Good morning. First, maybe you want to start by telling our viewers a little bit more about the verticals that you currently operate in. I do understand you've bagged a 144 crore rupee order from smart meters. The timeline of this order, how significant is this vertical to your top line? Is this one of many orders from what we understand? Just a little bit of background will be useful as well.
Yeah, sure. So we are basically into two major verticals. One is the smart meter and the projects related with that. And other is the consumer and industrial business. Now, in smart meter, we have been in metering since '96, and we are one of the leading meter manufacturers in the country. And as you are aware, the government has come out with the RDSS scheme with a DB foot model in it, wherein 25 crore smart meters are to be installed across the country. And this is, of course, to bring down the AT&C losses. And it's a major revolution, I would say. It's one of the biggest smart meter rollout program in the world. With this, of course, we expect the government expects that a major boost would come into the electrical segment, which would in case support the overall GDP of the country. Now, coming to the smart meter, we are currently sitting on over 3,700 crores orders, and every order, including the order, this 143 crores, is very significant for us. We are right now supplying to almost every major AMI SP, and even in this one, we gain another fresh AMI SP customer. And the rollout of this is going to be roughly in about 2 to 2.5 years, and that's usual for any AMI SP supplies. So metering, of course, is one of our major products and solution what we are offering. In the consumer and industrial division, we have the switchgears, we have the solar products, we have the lighting, the LED lighting, and the wire and cable. So in all, a major portion of our product range is from the smart meters right now.
Right. So firstly, tell me how much does smart meter contribute to your top line? And you mentioned that the rollout of this order is over the next 2 to 2.5 years. And it's from a new AMI SP. First, to begin with, when do you recognize the revenue of this order on your books? And if this is from a new AMI SP, do most of the businesses that you get come from repeat clients, which also means that once you've closed it with this new AMI SP, future revenue inflow is very likely? So first, when do you recognize this in your revenues?
Yeah, so our main portion is on the supply of smart meters. So the revenue gets recognized as and when the supplies are made. So there is no, it's not a project. It's actually a supply order, what we have. So the revenue recognition is based on the supplies. Now, when you look at it, the entire model of the metering, what the government perceives under the RDSS, this is the entire supply is going to be through the AMI SPs, which are actually the system integrators and the system providers. So, there are not too many of them. So, but our business is going to be in future through a lot of repeat orders, which we expect through these type of AMISPs. Now, you need to understand that the AMISPs are pre-qualified, and many of the pre-qualifications are done based on our meter, which are prior tested with them. So when we look at the business coming out, obviously there is going to be a lot of repeat orders coming in from them, because their systems, which they are placing in each and every household, are getting aligned based on our meters.
Can I just understand that in a little more detail, Mr. Seth? And good morning, Tamanna here. Why would there be repeat orders? And even as you're establishing more and more smart meters, first you have to increase the penetration of smart meters. You're saying there's a 25 crore target from the government. What is the frequency of repeat orders, and why would they be repeat orders?
Yeah, so let me explain it in detail. If you look at the utilities are right now giving orders to the AMISPs, and these orders are typically in bulk, because the government expects that the entire order book of these 22 crore sanctioned meters are going to be probably done in the next 12 months. Already, I think over 11 crore orders have been placed on the various AMISPs. Now, in turn, the AMISPs are supposed to place the orders on meter manufacturers like HPL. So as and when the delivery schedules are happening based on performance, based on the credible, the adherence to the supplies, the quality and integration, that is when the repeat orders would come in. So it's a long-term partnership.
Okay. I got it. So essentially additional orders or repeat orders from the service provider to you because of your track record. Understood.
Exactly.
So, Mr. Seth, out of the 22 crores, you're saying 22 crore smart meters will be put in the next 12 months. What is the share of the pie you could hope to potentially get?
Yeah, so I'll just correct what you just said. The orders are going to get released to the entire order book at the pace it is going. It would get released to the AMISPs. Now, they in turn have over 2.5 to 3 years to install them. So the orders coming to the meter manufacturers like HPL would take a little more longer time. I'm going by the pace, the way the rollouts are happening. But in terms of, and this may extend even up to 3 to 5 years going ahead.
So if I look at this financial year, when are the bulk of these orders expected to hit? In which quarter?
So they are having going on a quarter-on-quarter basis. So as I said earlier, as more and more supplies are happening, and the AMISPs have delivery schedules of various circles which they are catering to. So those supplies would keep coming in. Once the performance of a meter is established within the solution of the AMISP, then the repeat orders would keep coming in. Now, our strength, if you look at HPL, we have been in meters for last over 27 years. We have seen the various technological changes, the various generation of meters which have been coming in. So a company like us does have a big advantage over the other peers as well, where we have an integrated R&D of over 135 people right now working in R&D. We work on all types of technologies, on softwares, communication, now even going into the certain mechanical components. So overall, the strength of our performance over the years is going to get us the further business which goes on. And since the product has a 10-year warranty, definitely it is the product needs to be really robust at the Indian market conditions, and the technology needs to be at a very high level of performance, and which I think as HPL we definitely fall in that category.
Okay, Gautam, good morning to you. And
good morning.
From what would the current mix of the different segments that you have be? Sure, smart metering is the buzzword, but you are present in 3 others, some of which are hyper competitive. So what's the current mix? What do you envisage the current mix to be, or the mix to be, let's say 5 years out?
Okay, so currently the smart meter is about 60%, and the 40% is distributed between switchgears, lighting, and wire and cables. And for the next at least 2 years, because that is when the bulk of the smart meter supplies would happen, I would say the ratio would remain between 60 to 65%, although the consumer and industrial segment is also due for a big growth. So that would continue like this, but maybe in 5 years down the line, maybe again it comes back to a 50-50 product ratio, which traditionally HPL has always been, where metering has been 50% and the balance have been at 50%.
The other aspect, Gautam, is, so if indeed, let's say for the next 2 years it's smart metering and then it changes, what's the kind of growth rate that you envisage? Because your near term is driven by smart meters. If it peters out a little bit after those 2 years, if it does, we don't know that. Let's assume you get repeat orders as well. What's the kind of growth rate that you factoring in, not just for FY25, let's say for the next 3 years?
No, I think if you look at our growth rates, even going back 1 year, last year as a company we did about 16%. The metering has been at 27%, but other than metering, even switchgear last year was 27% growth. That again, we are seeing a good amount of growth. If you look at the domestic switchgears, even in the first quarter has been 19% growth. The wire and cable again has been performing over the last 2 years pretty well. That's again one segment where we see a lot of excitement and a good growth over the next 5 years. Now, coming back to your question, when the ratios of growth for the company would be in anywhere at about 20 to 25%, because the smart meter, and this is especially I'm talking about smart meters, because that is where we already have the orders, the requirements are there, and the peak I believe would come somewhere maybe in the 3 to 5 years. Still a long way to go. A lot of implementation still needs to be done because although orders have been given out, the implementation is still scheduled for next 3 to 5 years. So I would say that, when we look at the smart meter part, the next 5 years are going to be of a good high growth, and there is a lot of potential which would again, a lot of opportunity which would again emerge out post these 5-7 years, where the international markets would become very relevant for us because with the kind of performance we would be having, that again opens a new scope. A new level of a new generation of smart meters would eventually emerge out going forward beyond that.
Right.
Now, looking at our other verticals, the wire and cable also is again driven by a strong growth from the infrastructure segment, also from the revival of the building segment. So this is again one place where we are now looking to invest, looking to really focus to take that to a bigger level.
Mr. Seth, one quick question. Everything you mentioned does add up, and we talked about revenues. What I do want to understand from you is margins and profitability. And the reason I also ask you this is because the timeline of these rollouts, like you mentioned, is 1.5, 2 years, 2.5, 3 years, right? Commodity prices are fluctuating, market conditions are always changing. How do you hedge yourself against this? And what is the outlook on the margin picture, keeping that as the backdrop?
No, so we have seen an improvement in the margins. If you see in the first quarter itself, our PAT went up by almost 145%. Our EBITDA margin improved by 40%. Even last year, our EBITDA improved by 27%. So overall, the smart metering, of course, has a very good margin profile. We maintained in that way a lot of work by the R&D to keep down the cost. The switchgear again is traditionally a high margin product. We have seen an improvement in margins in wire and cable as well. Now, yes, the prices for smart meter are fixed for 2.5 years. But first thing, the certain fluctuations, the regular fluctuations have been factored into the pricing. That is one. But the role of metals is quite less. The ICs, especially the ICs and the active and passive electronic components, which are generally imported. So we normally book them at the time when we receive the work orders. So that negates any fluctuations which we make, which may affect our margins. So overall, due precautions and have been taken to ensure that the margins are kept steady. Although, of course, based on the geopolitical or any type of things, certain fluctuations can always happen. But I think they are well factored into it to the best of our ability.
Mr. Seth, congratulations, good luck, and we will speak to you soon. But that was a big order win coming in for HPL Electric. In the meantime, it's a very happy Monday morning for the bulls on the street. Nifty once again at a record high, and all thanks to Bank Nifty. Bank Nifty trading comfortably above 52,200. The activity is robust. If we can quickly pull up how the futures picture is, and if there is any change in the OI, I'd imagine both would be trading in positive territory, indicating that the buys for the Nifty and Bank Nifty is very clearly on the upside. So that's what we have in terms of the Nifty 50. There's a slight increase in OI, and 5th September futures are trading at a premium. Bank Nifty also setting out a similar sort of picture. So it looks good. It looks good, and the banks are leading from the front. The breadth of the market is good, barring a handful of stocks in the Nifty 50. The rest of the universe actually trades quite well. It's not actually just banks, Niraj. Financials as a pack are looking good. Look at anything. I mean, I don't know what is the reason for a BSE to do so well, but the buying is there. You maybe in anticipation of an NSE listing eventually in life. Actually, why don't we look at Zomato? What I did catch this morning was Swiggy is headed to file a DRHP as early as this week. Should have an impact on Zomato, I'd imagine, but trading flat as a fiddle this morning. But yeah, BSE is looking good. You've got Edelweiss Financial that we highlighted for you. Stocks like Suzlon, like we've always maintained, are trader favorites on a good market. Those stocks see lots of action. This morning, no different. 3% high on Suzlon for no apparent reason. Tata Power also looking good. Adani Green, Adani Power leading the way in today's day of trade. Anything else, Niraj, you've spotted? It's also PSU banks as opposed to private sector that's looking good today.
Yeah.
Union Bank up 6%.
Yeah, but it's NBFCs all the way, Samina. I mean, it just seems financials are hogging the limelight. IT is flat and a clutch of other names. VIX is slightly higher too. But it's the primary market action that takes center stage. And now, for the next 20 minutes, we are going to focus on primary markets. Robust momentum, of course, in a clutch of these names as well. And one of them, at least one of them, I mean, multiple ones driving demand, but one of them is Bajaj Housing Finance, which is all set to make its debut. Rucha joins us now to tell us how these big IPOs have performed in the past. Rucha.
Thanks, Niraj. So as you rightly mentioned, there's a lot of hype around Bajaj Housing Finance IPO, but let's quickly have a look at the issue details. Now, starting with the issue price, issue price is set at 66 to 70 per share, and the grey market premium is huge, around 120% over this. The issue size is around 6560 crore of rupees. But then when we move on, actually the overall subscription is more than 63.5 times for Bajaj Housing IPO. But then let's move on to look at the top 5 largest IPOs, and it starts with LIC in the top of the list, followed by Paytm, Vodafone, which listed at around Vodafone Idea, which listed in April this year, followed by Coal India and Yes Bank. Well, LIC, the issue size were around 21,000 crore and subscribed around 3 times. But when we look at the return performance of these top 5 IPOs, we'll see that the returns are not really great. That would make the investors happy. When we look at LIC, it actually listed at a discount of around 8% and 1 year return negative 35%. So a lot of hype around these 5 top IPOs was not justified by the returns that they have given. Even if we look at Coal India, which was subscribed at around 15 times the largest subscription among these 5 IPOs, decent listing gains, but 1 year return pretty muted at around 12% is what we can see. But then when we move on to the absolute return, which these top 5 IPOs have given, again a muted sort of number over here. Absolute return since the listing till date is around 20% for LIC. I mean, that is very muted in terms of the hype which was created around these IPOs. And then Paytm was 66 in the red and 30% in terms of the compounded annual return. So these kind of IPOs are not actually backed by the return that they have given, but we'll definitely see what Bajaj Housing will have to give it to us.
We're already seeing what it will have to give, because pre-open is at 151 rupees. Yeah, 150 rupees versus an issue price of 70 rupees. So I think, this is going to be one that exceeds most expectations. And the point is that this might not just be something which sees a momentary listing pop. That's really going to be the big question. Are we going to see just a momentary listing pop, or is there enough appetite out there? A lot of people who did not get subscription who will come in on day one. Should you be coming in on day one if you did not get allocated? What should you do if you did get allocated? How long do you hold? Remember, 50% of all investors exit in the first week of an IPO listing. Is this going to be a different story as well as Bajaj Housing Finance is concerned? We talk about all of that after a very short break. We'll be speaking with Shweta Daptardar, Vice President of BFSI at Elara Securities on Bajaj Finance, Bajaj Housing Finance, and a lot more. Stay tuned.
Welcome. Thank you for tuning into Talking Point. This one is going to be a special one. You've got a big listing happening in a few minutes from now, and then, of course, our conversation with market guests to understand what happens in this very, very busy event-heavy week. But first up, Shweta Daptardar, Vice President of BFSI Elara Securities, joins in to talk to us about what you should do if you own Bajaj Housing Finance or whether you want to buy Bajaj Housing Finance. Hi Shweta, I guess you've had a busy last few weeks. This is one of the biggest listings of our times, oversubscribed to the tune of 1% of India's GDP. Today, the stock is expected to get a 100% listing gain, which will take Bajaj Housing Finance to market cap to over 1 lakh crore of rupees. If one gets a 100% gap up, and they've been lucky to get subscription, what do you recommend they do? And what happens to those investors who weren't lucky enough but were looking to buy Bajaj Housing Finance? Should they do it this morning?
Morning, Tamanna. So as you rightly pointed out, this is happening to be one of the biggest listing, especially in the housing finance space after a long time. So Bajaj Finance today ranks almost second largest HFC in the space, just after LIC Housing Finance, with almost 970 odd billion book as we speak. Given the fact that the listing per se has been quite bumper and the initial market valuation, which was touted to be around 59,000 to 60,000 odd crores, would now almost reach 1 lakh odd crores, as you rightly pointed out. It still maintains the attractiveness that is associated with the entire organization or the stock valuation for that matter. So at the 1 lakh valuations per se, you will see price to book somewhere closer to almost 4x trailing and closer to 3x forward multiple. But even despite the premium valuations, we continue to believe that Bajaj Housing Finance will maintain its premiumization given the fact that it has a very strong management pedigree. It functions on an omni-channel network system for its sourcing of customers. It is having one of the best credit ratings today, which is AAA, which gives its benefit on the cost of funding. So we continue to believe there is lots to benefit to the investors, both who would grab this, and best luck for those who would miss out.
That was actually Samina, not Tamanna. She will talk to you in a minute from now. And of course, we can always sit here and talk about the strengths and the leverage that Bajaj Housing Finance will have from its group companies. The fact that they have such a healthy book, the fact that they have about 45 odd lakhs average ticket size, which is better than the industry. But one concern, apart from expensive valuations, that some may have is the fact they've got a high loan to value number, which largely means that the lender has a higher risk in case the asset price declines. Are you concerned about that? Do you feel like that is one area or the only negative that potentially could make an investor slightly more circumspect as the valuations continue to get stretched?
To understand the product mix and the LTVs respectively. So if you look, 58% of the Bajaj Housing Finance book is concentrated in home loans, which has higher LTVs. Now 58% of your book, which is salaried home loans, has 86% of the customer base with a CIBIL score of 750 plus. So there itself, the customer vulnerability is taken care of because you are focusing on mass affluent customer base. If you look at the LAP and the LRD profile, so LAP is another 10-11% of the book. 19 to 20% is LRD as a percentage of your overall book. There, if you look at the LTVs, they have been restricted to 50%. So if you look at the overall portfolio in perspective, so it is very much strong on the credit risk perspective, from the credit risk perspective, given that 86% of the customer base on the salaried home loan side has 750 plus CIBIL score.
All right, there we go. The countdown.
8, 7, 6, 5, 4, 3, 2, and 1.
Listing here for Bajaj Housing Finance, the big one, while the other two are sedate, but 118% upside for Bajaj Housing Finance on listing. 124
now.
Yeah, so 124% for Bajaj Housing Finance. This is stellar stuff. We just get the other two before we focus on Bajaj Housing Finance again. But just the pricing of the other two very quickly. 3% lower for Cross and 6% for Tollins. Not bad for Tollins, but just that it dwarfs comparison to the 130%.
It's quite sad for a listing. But this is just the first listing moment. I think we should just cut full frame for a few seconds to the pictures of Sanjeev Bajaj there and the Bajaj Housing Finance listing. They're still sitting there at the podium. Still standing there at the podium, of course, taking in all of those congratulations. This is, in that sense, a historical listing because, yes, we are flush in the middle of IPOs, but quantity doesn't equal quality always. And this is a quality paper that's available. Shweta Daptardar with us. Shweta, hi, Tamanna here, and so great to speak with you this morning, especially on all things Bajaj Housing Finance. Now that we have a number, at least initially, 160 rupees. And you answered briefly the question of what should you do if you have allocation. I'm going to ask you that again now that we know it's 160, 130% up, 160 rupees for a 70 rupee share. What do you do if you didn't get allocation? Buy today, wait for it to settle down. What should be the strategy there?
Definitely, despite the bumper listing, the underlying tailwinds remain very positive and robust for the entire housing finance space, let alone be Bajaj Housing Finance. And look, we are talking about almost 90, like I mentioned, 970 billion odd book, which is diversified across all the segments covering the entire housing finance spectrum. So be it housing loans, home loans, prime, affordable and salaried, be it LRDs, which is lease rental discounting, loan against portfolio, and even developer financing. Market is also not today factoring in the stable footing of real estate developer financing portfolio, which is back in reckoning. So there is lots to gain from housing finance stocks going forward, and it's just the beginning for Bajaj Housing Finance. So one should wait for the subscription and rather should jump into the stock with every correction, if there is any.
Suppose there is no correction. I'm seeing 151 right now. Very quick, clear answer, Shweta, to my question. Right now, if you're sitting, you got your refund, didn't get the allocation. Am I buying or am I not buying?
You should be buying.
Okay.
Definitely buying.
Okay. That's great. What about other housing finance companies which are also lifting on that wave? There's a revaluation, re-rating of all of them. Which ones of those should I look at?
Yes. So as you rightly pointed out, Bajaj Housing Finance listing is helping the wave to ride for other housing financiers as well. So like I said, the biggest one, which is around 2,900 billion odd book as we speak, is LIC Housing Finance. We have PNB Housing Finance, which is around 720 odd billion book. But if you look at from the valuations perspective, so definitely despite Bajaj Housing getting listed at premium valuations, we have few other names like PNB Housing Finance, Canfin Homes, which slightly better and relatively placed in the entire housing finance space. Like said, given the underlying trends being very positive, we continue to believe most of these housing financiers are going to ride the wave, and the key differentiation between each of these names is going to be superior growth and earnings. So if you look at Bajaj Housing Finance, between FY21 to 24, the company has clocked 33% AUM CAGR and as high as 56% earnings CAGR. So it is one of the most supreme growth-led entities with a diversified franchise. I would definitely place bets on diversified housing finance entities, and their PNB Housing Finance definitely fits the bill.
Guys, just the valuation picture that Shweta was talking about at the IPO price, and we have those graphics, by the way, so we'll put them up. At the IPO price, Bajaj Housing Finance was at 2.9 times. Aavas 3.1 times, Aptus 3.6 times, Aadhar 2.9 times, PNB Housing that she spoke about 1.8 times. Now PNB Housing has gone up 3-4% today. So let's assume it's trading at around 2 times multiples, give or take a few, right? Bajaj Housing Finance is 6 times. So there is a significant premium that this one has over PNB, and granted the nature of the franchise is different. And that is where the difference in valuation comes in. Shweta, the other question is, and non-housing finance, are there other NBFCs which are better placed to buy into, or is your favorite crux of NBFC stocks, are they the housing finance companies?
So we at Elara Securities definitely take calls on credit and business cycles. So the current cycle, which is led by retail credit, definitely stands very strong for housing finance space and for gold financiers per se. So if you look at the tight liquidity conditions for banks, they definitely pave better game and room for housing financiers and gold financiers to outperform. On the other hand, we have seen this cycle being very strong for wholesale financiers and power financiers, given the fact that asset quality pressures have stabilized for them for last 2 to 3 years. So in the entire NBFC finance space...
Shweta, allow us to just interrupt for a minute because the Bajaj Housing Finance press conference is on. Let's cut across. Yeah, I think they'll start in a minute and we'll cut across to what Sanjeev Bajaj has to say. But Tamanna, this is what dreams are made of, right? Of a business which started off as one company years back. It was into insurance, that got into consumer lending, has now a mutual fund arm which is fairly large and developing, has a housing finance business which is listed. The journey of Sanjeev Bajaj over the last 15-20 years has been remarkable.
Exemplary, and it's not ending there, right?
Yes, it's not.
He says that I want to be part of the financial needs of every Indian throughout that life cycle. Let's listen in, actually, to that Q&A.
The book is very close to that 1 lakh crore mark, about 97,000 crores. 3 years CAGR 31%, 5 years CAGR 29%, much higher than what your peers have been doing. What I want to understand is that till when do you expect this kind of strong growth to continue? That is upwards of about 28 to about 31%. When does the growth start normalizing slightly? Or do you think this is the normalized growth for the business that you've been doing? And can you double that book in the next 4 years, just going by the growth that you've been doing so far? Next question is on the NIM outlook. I just want to understand what kind of margins do you foresee yourself? Now that you're listed, you'll be able to share some numbers on that front. And as banks are seeing a drop in their CASA ratio, down the line, do you expect that impact to come on your NIMs also, because it's become costlier for you to raise funds from the banks also? In that case, what are the alternate measures in terms of the tweak to your borrowing mix that you're looking at? Final question, 7 years we've had Bajaj Finance or Housing Finance listed. I understand there was certain amount of input that came from the regulator as well. You have another 2 subsidiaries, the life insurance, general insurance arm. The regulator there has been saying that companies which complete 10 years should look at listing. Which one out of those 2 and by when could we see them getting listed, them coming public as well? Thank you so much.
Let me just start first by thanking our shareholders, our investors, and everyone that's contributed for this listing today of Bajaj Housing Finance. We are truly overwhelmed by the response that we are seeing over the last couple of minutes. I'll take the question on growth, and then Atul will take the question on margins. Those are the 2 relevant ones. We've had very strong growth, but this is in the background of a very strong, consistently growing economy. And if you look at credit cycles in India, we expect steady credit growth at 12 to 15% in the housing industry. And on the back of that, we are enthused that we can continue to grow strongly. The economy is showing very strong tailwinds, and that's what gives us this comfort. Atul will take the margin question.
See, we are a variable rate company. On a asset side, our assets are variable, which are largely linked to a floating rate, which is linked to our cost of funds, and the liabilities are also largely variable. So on a steady state basis, through the cycles, mortgage companies generally have a steady state margin. So we do not expect any impact on margins from the listing, whether positive or negative, because that was from a cost of fund perspective, because we had already been a highest rated domestic rated company, and our cost of funds are relatively quite competitive compared to the market. And with a variable rate asset size, the NIMs are likely to remain stable, like in case of all variable asset companies. We do not see the credit deposit ratios, what the question you called out on, if they are deteriorating further in terms of a mix. We have a healthy mix of bank borrowings and the money market in our book, and we expect it to continue.
And on the last question,
yeah, we are talking about Bajaj Housing Finance. We'll take that another time.
Thank you so much.
Hi, sir. Ankur Mishra from ET Now. First question to you, Mr. Bajaj, and I'll come for the second question later. I want to ask that now that shareholders, the prospective shareholders have become shareholders now, and they have rewarded with you with the bumper list. Now for them, what should they expect in next 1 to 2 years from Bajaj Housing Finance? Is there going to be any kind of a dividend? What kind of promises do you want to make for shareholders?
Well, we've just listed the company, as you said correctly a few minutes ago, and we are thrilled with where we are. Shareholders should expect a business that grows with high quality, a high level of corporate governance that brings the right blend of technology in this particular business, and sustainable, sustained growth with high focus on quality of the business and a diversified book is what we look forward to building.
To you, Mr. Jan, I want to understand, you mentioned about the borrowing mix from banks as well as other options. But with the kind of scrutiny and the new norms which is coming from Reserve Bank of India, can we expect some kind of change in terms of ratios, how we will be borrowing?
See, we borrow at a particular point of a time looking at the market availability and also optimization of our ALM and optimization of our cost of funds. So there is no standard at a point of a time what happens. So the calls are taken by the treasury team on the market scenario. Like I called out to the earlier question, we do not envisage, given our rating and given the confidence of the lenders, which whether in the money market or in the banking space have on the overall Bajaj and Bajaj Housing Finance there, we do not expect the challenges to be there in raising the money, because regulators' requirement had been towards increasing risk weight to other category of companies, not the housing finance companies. So we don't expect a challenge in terms of maintaining the balance.
Thank you.
Firstly, I want to congratulate Bajaj for listing. My question to you is, Sanjeev, that how do you assess the demand for affordable housing going, because it has been lacking with respect to the premium housing, and do you see the rate cuts will have an effect on this? And also what is the plan for the promoter holding, the long-term view? And my last question is that the merger of HDFC Limited and HDFC Bank, has it reduced the competition intensity on ground?
So I'll have Atul answer some of the operational questions, but let me say, as promoters and as promoter group, we are strongly supportive and highly confident on this business and this company. We know as per listing requirements, within 3 years, promoter shareholding has to come down to 75%, and that is something that we will look to doing in the coming years. Atul, over to you.
On affordable, your question, see, given India, in recent parts, it is correct what you have called out, the premium housing growth had been higher than the affordable housing. But given very strong government focus on housing for all, very strong schemes what we have seen from the budget what have come, and on the ground demand from aspiring India, we believe affordable housing finance or affordable housing demand would be far more in the coming years as we go from here. That is where on affordable we are. So rate cuts do not necessarily tickle the demand up, like we have not seen rate increases trickle down the demand. That's what we saw, because again, it being a variable rate business, I think the borrowers and the people, when they decide to buy a house, they know that the rates are subject to going up and down, because in India it's a full variable or a floating rate mortgage is what we run. So it's a part of the cycle. Generally, decision for buying a house is not deferred or not preponed because of the pricing in our observation.
And about the merger of it, has it reduced the competition on ground?
HDFC still is present in the mortgage space. So they have changed the corporate entity from an HDFC Limited. Now they do the mortgage business in HDFC Bank. So the situation remains there, and they remain one of the largest players in the mortgage industry even today.
सर नमस्कार, मैं सौरभ पांडे जी बिजनेस मुंबई से। सबसे पहले आपको ढेरों शुभकामनाएं आपकी कंपनी की शानदार लिस्टिंग पर। मेरा सवाल मिस्टर बजाज से, सर आगे बढ़ते हुए अगर कंपनी की ग्रोथ की बात की जाए, किस तरह से आप जो है कंपनी का ग्रोथ देख पा रहे हैं, और जिस तरह से आपने अपने स्टेटमेंट में कहा कि सभी को अपना घर मिलने का पूरा अधिकार है, कैसा विजन आप आगे बढ़ते हुए देख पा रहे हैं?
सेक्टर की जो ग्रोथ रही है और जो हम कमिंग ईयर्स में देखते हैं, तो दिस इज लाइकली टू बी 12 to 15%, विच इटसेल्फ इज वेरी स्ट्रांग। हमारी ग्रोथ रही है हायर देन दैट इन द लास्ट फ्यू इयर्स। इसकी कारण यह है, इट्स अ कॉम्बिनेशन ऑफ ए डिवर्सिफाइड book that we have built across multiple customer segments. Second, it is the way we leverage technology and data for a seamless customer experience in taking on a home loan. And third is the focus of the management to build a good quality long-term business. So, हमारे हिसाब से these are all ingredients that continue to be there.
अतुल जी, मेरा अगला सवाल आपसे है कि अगर बात की जाए कैटेगरी चेंज की, तो हम होम लोन से अब डेवलपर लोन पर भी फोकस रख रहे हैं, तो किस सेगमेंट में सबसे ज़्यादा ग्रोथ देखने की उम्मीद कर पा रहे हैं?
देखिए, हम चारों सेगमेंट जो मॉर्गेज के बड़े सेगमेंट हैं, चाहे वो होम लोन है या डेवलपर फाइनेंस है या लीज रेंटल डिस्काउंट या लोन अगेंस्ट प्रॉपर्टी, हम शुरू से ही सब सेगमेंट्स में रहे हैं। और जो क्योंकि हम हाउसिंग फाइनेंस कंपनी के तौर पर रजिस्टर्ड हैं, हमारा डोमिनेंट पोर्शन ऑफ बुक एज अ रेगुलेशन will be home loan and continues to be home. Is still also home loan and will continue to be home.
हाय सर।
नमस्ते, मैं अनुराग सर। मेरा सवाल सर, जो करोड़ों रिटेल निवेशक हैं जिन्होंने आपके आईपीओ में सब्सक्राइब करा और उनको रिवॉर्ड भी मिला, तो उनसे जुड़ा हुआ होगा सर, उनको किस तरह का आप भविष्य से जुड़ा हुआ आश्वासन दे रहे हैं? और आईपीओ के दौरान सर आपके द्वारा एक जो बात कही गई थी वो काफी लोगों ने पसंद की, रिटेल निवेशकों ने भी पसंद की कि भविष्य की आप एचडीएफसी बनाना चाहते हैं बजाज हाउसिंग फाइनेंस को। तो सर उस लक्ष्य के लिए जो ग्रोथ के टारगेट है आपके किस तरह के होंगे, किस रफ्तार से आप बढ़ेंगे? दूसरा सवाल सर इस जवाब के बाद।
तो उसमें मैं यही बोलूंगा कि जो रिटेल शेयर होल्डर्स आए हैं, वी आर वेरी ग्रेटफुल टू देम, एंड हमारी कोशिश यही रही है टू बिल्ड ए हाई क्वालिटी बिजनेस गोइंग फॉरवर्ड, एंड वी लुक फॉरवर्ड टू हैविंग यू विद अस एज लॉन्ग टर्म शेयर होल्डर्स लाइक यू हैव बीन इन सो मेनी ऑफ अदर कंपनीज।
सर दूसरा सवाल मेरा रहेगा, हम जिस तरह से लिस्टिंग के दौरान कई सारे दिग्गजों ने कहा, आपके बीआरएल्स ने कहा कि 30 साल बाद जो है ये एक बजाज ग्रुप का आईपीओ आ रहा है, तो उसको आप आपकी इंटरनल भावना किस तरह की है? और सर इसके साथ साथ आपने अपने संबोधन में भी कहा कि हम एनविसाज करते हैं कि हर भारतीय का एक फाइनेंशियल पार्टनर बनने का, तो वो लेकर क्या प्लान है? तो हम देखिए कि जो 30 साल का इंतजार रहा था वो भविष्य में इतना ज्यादा नहीं होगा, जो कि निवेशकों को भी सर 30 साल तक इंतजार करना पड़ा।
अभी भविष्य के बारे में तो क्या बात कर सकते हो, तो भविष्य में ही मालूम पड़ेगा। But yes, we are all very thrilled with this listing after 30 years. And like with every other Bajaj company, our aim is to build high quality institutions, and we hope that the markets will recognize that.
Thank you.
फर्स्ट ऑफ ऑल कांग्रेचुलेशन सर। सर जिस तरीके का रिस्पांस हमें मार्केट में देखने को मिला है, जैसी शानदार लिस्टिंग हुई है, कैसी ओवरवेलमिंग सिचुएशन आती है इन्वेस्टर्स का इस तरीके का भरोसा देख के, साथ में ब्रांड को देखते हुए जो इन्वेस्टर ने भरोसा जताया है?
नहीं, वेरी क्लियरली इन्वेस्टर्स की जो इंटरेस्ट और भरोसा रही है, दिस इज वेरी हम्बलिंग फॉर अस। वी आर नॉट एक्सपेक्टेड फॉर इट टू ओपन वेयर इट डिड। ये मैनेजमेंट पे और बोर्ड पे एडिशनल रिस्पॉन्सिबिलिटी भी रखती है कि जिस तरह से हम पिछले 7 सालों में एक क्वालिटी बिजनेस बिल्ड किए हैं, उसी तरह वी मूव अहेड, और and we play a very significant role in not only in the housing business but through that in helping taking credit across India in the coming years.
जी सर, जैसे कि इस टाइम पे हम रेपो रेट देखें तो अपने ऑल टाइम हाई पे है, तो हाउ यू आर एक्सपेक्टिंग द रेट ऑफ ग्रोथ, और ये किस तरीके से आपके बिजनेस में इम्पैक्ट कर सकता है, एंड हाउ आर यू प्लानिंग टू लाइक ओवरकम दिस?
रेपो रेट का बढ़ना और घटना पूरे कंट्री के मैक्रो से रहता है, और कॉस्ट ऑफ फंड्स और बैंकिंग सिस्टम का जो प्राइसिंग रहता है, जो हमको लोन मिलते हैं या जो हम आगे लोन दे पाते हैं, वो इससे लिंक रहते हैं। आज का जो भी डिमांड रहता है, जैसे मैंने पिछले वाले क्वेश्चन में भी बोला था, क्योंकि हमारा जो एसेट साइड है वो भी वेरिएबल होता है, जो हमारी कॉस्ट ऑफ फंड से लिंक होता है, और कस्टमर्स को भी जो घर बनाता है, क्योंकि वो लॉन्ग टर्म कमिटमेंट है, उनको मालूम है कि थ्रू द साइकिल कभी रेट ऊपर जाते हैं और नीचे जाते हैं, और क्योंकि रेट लिंक होते हैं, जैसे रेट ऊपर जाता है नीचे जाता है, इसका हमने डिमांड पे बहुत ज्यादा अंतर पड़ते नहीं देखा है। और ऐसा ही, और अभी वैसे भी जो जितना हम सुन रहे हैं या पढ़ रहे हैं, उसके हिसाब से तो अभी रेट आने वाले समय में, कुछ समय में जब भी होगा तो नीचे ही जाने की आशा है, और ऊपर जाने की तो आशा नहीं है।
Hi sir, this is Subhana Sheikh. I work with NDTV Profit. This is the first listing of by Bajaj Group in nearly 30 years. Just wanted to understand when can we see another listing, and Bajaj Housing Finance is playing on India's large residential real estate sector. So just wanted to understand, with interest rates expected to come down soon, how do you plan to evolve your business going forward?
Well, a number of our companies have grown with capital that has come from their parent companies. As and when a business is ready to go to the markets, we take it there, and that's where we are today with Bajaj Housing Finance. When the next is, who knows? Hopefully not in 30 years, but less, but who knows? Atul will take the next one.
On the rate of interest, again like I called out, क्योंकि मार्केट में रेट ऊपर नीचे जाता रहता है तो उससे इतना डिमांड में भी फर्क नहीं आता है, प्रॉफिटेबिलिटी में भी फर्क नहीं आता है, क्योंकि दोनों साइड रेट ऊपर जाने और नीचे जाने के लिए स्ट्रक्चर्ड होते हैं.
Good morning, everyone. I am Pratik from PDI. So your OPEX asset ratio has been improving in the last 2 to 3 years. So what measures company is taking to sustain that growth?
देखिए, जो हमारा कंसिस्टेंट काम रहता है कि हम टेक्नोलॉजी द्वारा अपनी प्रोडक्टिविटी बढ़ाने की कोशिश करते रहें, जिससे जो हमारी ऑपेक्स जो नेट इनकम रेशियोज हैं कम आती रहें, और पिछले 2-3 साल में हमने उनको कम आते देखा है. कोशिश रहेगी कि आगे भी जैसे हम और बढ़ते जाएंगे अपनी प्रोडक्टिविटी बढ़ाने के लिए और जितने टूल्स यूज कर सकें वो करेंगे, और जैसे हमारा साइज बढ़ेगा उसका भी हेल्प होता है, क्योंकि ऑपेक्स टू इनकम में इनकम का भी हिस्सा रहता है. जैसे साइज बढ़ता है तो इनकम बढ़ती है, तो भी रेशियोज और ठीक होती है.
All right, so that's the bumper listing of Bajaj Housing Finance. I mean, it was expected to be a good one and definitely has worked up to all expectations at about 158 now, 130% up and more. Shweta Daptardar is with us, Vice President BFSI. Shweta, you heard some of the things that Sanjeev Bajaj said, and of course Atul Jain also said on how they see growth panning out, and that's really the question. Bajaj Housing Finance has had a really fast streak, a winning streak of growth in the last 8 to 9 years. The question is, how do you sustain that kind of AUM growth that they've had as well, and the competition that they've been seeing? Do you see that pace sustaining?
Yes, definitely. We certainly believe that this space is here to sustain. And there are 2-3 reasons, if I could enlist here. One being the deep marketing strategy and penetration, especially in the non-home loans front. So be it LRD portfolio, be it developer finance portfolio. So BHFL is poised to go deeper markets, tap both internal as well as external sourcing through the enablers, through connectors, through their digital platforms, which they'll be banking upon. So there is a lot of scope there for increasing the AUM base right from the sourcing per se. Second, if you look at the entire entrenchment, so like I said, a diversified portfolio mix with a strong presence pan-India. So BHFL today operates out of 20 odd states in the country with a diversified mix. So as even Sanjeev Bajaj and Atul pointed out there, affordable housing finance market as we speak is 11 trillion odd loan market today, which is another segment which we believe Bajaj Housing Finance can do a lot of work there, given the kind of risk strategy and the kind of inheritance they have in terms of risk management policies. So affordable housing finance space is going to be the second biggest trigger in terms of product diversification for Bajaj Housing Finance. And last but not the least, the execution. So look at the team. Atul Jain has been around for a good number of years. The entire executionary team and the kind of omnipresent strategy, which even I highlighted earlier, by which they are banking upon the digital platforms, digital sourcing platforms, and this coupled with physical branch network, which is highly penetrated, I think that will be the third biggest trigger. So we certainly believe 25 to 30% AUM CAGR stands imminent for next 2 to 3 years for Bajaj Housing Finance.
So Shweta, so 158, 159 right now. Do you have a target price for Bajaj Housing Finance?
Yeah, it's a little too early considering that it has been a bumper listing. But yes, like we also pulled out the valuations. It's been pretty expensive. But let me tell you this, next 2 to 3 years, we are looking at very strong housing finance space. And as you must have heard, even Atul Jain, the kind of emphasis that has come both from the central and the state government side, the housing shortage which we are staring at today, especially in the EWS LIG category, wherein we are missing out on 60 trillion incremental housing loans, which these HFCs and affordable players can bank upon. So the space looks pretty robust. Yes, there are certain factors which differentiate each housing finance or each company from the other. But while coming to Bajaj Housing Finance, the premium valuations are here to stay. and we continue to maintain our bullish stance.
All right, so Shweta there, very bullish on Bajaj Housing Finance. Yeah, I mean, it's difficult to have any other kind of point of view on a day like that. Thank you so much for speaking with us. She's Vice President, BFSI Elara Securities. And let's just pull up what's happening with Bajaj Housing Finance as it lists stellar bumper listing over there. Not too much that came out of that mini press conference that Atul Jain, AMD, and of course Sanjeev Bajaj had, as was expected. They welcomed and thanked all the investors, etc. And that's a par for the course. I think the true test will be the next quarterly numbers, and that's where we'll see whether these valuations are worth it. In fact, Harsh joining us for more on this. And Harsh, from here on, if we were to look forward, the bumper listing is done. But from here on, it becomes a question about living up to those expectations on the financials, isn't it?
Absolutely, Tamanna. You said it. 6+ times in terms of 1 year forward price to book, certainly not cheap anymore. But can this kind of valuation sustain? Mind you, the free float of the company fairly low. We did ask, or rather we did hear the management talk about how promoter ownership will likely get diluted or will have to get diluted as per norms over the next 3 years. But at the moment, let's look at it for the moment. 11.5% in terms of the free float available, but out of that, a lot of it is locked in. For institutions, they are unable to sell, lock-in of around 3% or so in terms of anchor book. Is yet to unwind over at least the next month or even beyond. So maybe a month from now, 1.5% of that 11.5% will get unblocked. Currently, around 6.4% only is what is available for trading. A lot of investors unlikely to take those gains home, at least the way in which analysts as well as the street is viewing this stock at the moment, and therefore the free float is going to be extremely low, or the available float for sale is going to be extremely low today. Very, very few people likely to book in to those profits. In fact, as per SEBI data, only 50% sell their shares on listing, and likely because this is a larger group and the kind of gains Bajaj Finance has made over the years, the kind of reputation Bajaj Group has, that percentage may well be higher. There you go. The first anchor book opens 1.51%. Which is around 12.5 crore shares are likely to be released only on the 12th of October. So that may increase the float a little bit more, thereby giving the shares a lot more stability in terms of price. On 11th of December is when the second anchor book opens. So 3% more will likely be released by 11th of December. So keep that date in mind. Of course, we'll update you on those dates as well. But that's exactly what is playing out likely on the stock price even today, and will continue to play out over the next month or so.
Okay, thank you for that. All right, bumper listing in focus this morning. Thank you so much, Harsh, for joining us. That's all the time we have on this edition of Talking Point, but stay tuned. A lot more coming up on the other side.